all that kind of stuff?
It does, but it kind of takes a back seat to two other major factors, which is the health of the economy, which creates demand for Treasury securities. So if you have a significant amount of, inflation going down or a recession coming, and there's a flight to quality, then obviously that creates increased demand for Treasuries, and conversely, a reduction of demand of Treasuries. Then the second big thing, at least the way that we look at the market, is the savings rate. So is global savings and U.S. savings enough to keep consistent demand for Treasuries and fixed income securities in general? And then tertiary to that would be the supply of Treasuries. So in general, the way that we look at the supply angle and the deficits is really as kind of a multiplier effect. So when we had, for example, a pretty good economy, and we had a dearth of supply, which is what the Treasury Department suggested to us earlier this month when at the quarterly refunding statement. It amplifies these moves. So you have a little bit of a backup, but then all of a sudden you say, hey, there's going to be 200 billion more of Treasuries coming that we didn't expect, and boom, you wind up moving 10 basis points just because of that one piece of news.
So we did see just weeks ago when Fitch did downgrade the U.S. credit, but then also recognizing that there clearly is a problem with the political brinksmanship that's in Washington. Nothing new, right? When you're thinking about that issue there. But how do you view that, as far as how much of a concern is that for you when you're viewing that particular corner of markets?
Well, so the debt ceiling is what you're talking about there, with the political brinksmanship around the debt ceiling that comes up every couple of years and then has over the last decade. I think that the way that I look at it is that it continues to be a very low risk of an absolutely disastrous potential event, right? So if the government were to surpass the debt ceiling and the government had to default on any of its obligations, whether that was not even necessarily debt, but if it doesn't pay vendors or misses payments to staff, for example, all of those things would be incredibly detrimental to the willingness of investors to buy U.S. Treasuries, and would actually be an absolutely horrible event. We don't know that for sure, and there's always politicians who ask me, hey, we don't see this in the market. Like, we don't see people running away from Treasuries because they think that there's going to be a default. The problem is that very few people actually think that that they're likely to cross over the debt ceiling and that you'll have an actual default. But if you did, you can't take it back, right? So it's not like the federal government can say, oh, we didn't really mean to default for those 3 days, and we're never ever going to do it again. Investors then will be pretty wary to invest in some instruments that are coming due, because you don't want to take the risk that you're not going to get a coupon payment or not going to get principal back, right? All of those things is a big risk. So that was very high up on Fitch's list when it made the determination of whether or not it was going to downgrade the U.S. Front and foremost was the political angst around the debt ceiling.
So, Ira, has there ever been a scenario where, when we need to fund something, the government needs to fund something, whether it's a debt ceiling or something like that, that the investors just don't show up? Do we have failed auctions? Has that ever happened?
So in the U.S., the way that auctions work, you can't have a failed auction assuming that the primary dealers do the job that they've signed up to do, right? So the primary dealers all have to bid for a pro rata amount of Treasury auction. So if there's 20 dealers, they each have to bid for 5%. So there'll always be 100%, bid to cover of one at least. What you have seen, and you saw this in the 80s, and this is where the idea of bond vigilantes came up, is that investors didn't show up, and then when dealers had to take down Treasury auctions, what we call back bids got hit. So dealers don't necessarily want bonds at auction. So instead of bidding where the market is, they'll bid 5 basis points, 10 basis points, 15 basis points higher than the current yield. And when you see auctions come in at those higher yields, that's usually dealers' back bids getting hit. So I think that you can't have a failed auction like they have in Germany and some other places, but you can have very weak auctions and weak demand at those auctions, and you have seen that at different times in the past. Not recently. Interestingly, this month the auctions actually were in general pretty good and pretty well received, even though the sizes were a bit higher than what we thought was going to what they were going to have to issue.
Looking at deficits specifically, why do they improve most when Washington is split?
Yeah, I think it's because basically when you have one party in power, when Republicans have the White House and both houses of Congress, or when Democrats have the White House and both houses of Congress, they're incentivized to deficit spend or increase deficit. So for Republicans, it's doing what Donald Trump did in 2017. It's cutting taxes, and by cutting taxes, assuming you don't cut spending very much, you're going to have higher deficits. And on the other side, Democrats tend to spend more money and not raise taxes consummate to that extra spending. So what happens is when you have split government, basically that's the only time that you see very significant improvements in deficits, where you wind up seeing basically inaction by the government, and spending levels stay relatively constant, whereas assuming you have any kind of economic growth and wage growth, taxes start to go up, so you wind up getting improved deficits during times of split government. So split government is really what you want if you're a deficit hawk.
All right.
Split governments also tend to help the stock market as well, Paul.
Is that right?
Yeah, I've written a story. Yeah, I have. I've done a lot of reporting.
No
and
surprise.
you'll see more of those stories coming up next year, given that it'll be an election year.
All right, Ira, thanks so much for joining us. That's Ira Jersey, the infamous Ira Jersey, the chief U.S. interest rate strategist. He's also a mogul in the world of minor league soccer, specifically in central New Jersey. Doesn't get any bigger than Ira Jersey. He's a Bloomberg Intelligence. We appreciate getting a few minutes of his time here. And just looking at the markets here as we approach 1 p.m. Wall Street time, S&P 500 up about 0.5%, NASDAQ up 0.7% there. So we keep an eye on that. The two-year Treasury, it's off 3 basis points, 4.86%. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thank you, Paul. The first over-the-counter version of Narcan is hitting drugstore shelves in the next few weeks. Bloomberg's Erica Hershkowitz has more.
Walmart, Walgreens, and CVS will begin selling Narcan without a prescription. The medicine that rapidly reverses an opioid overdose will cost around $45 for 2 doses. Emergent Biosolutions, the makers of Narcan, has already begun shipping the nasal spray to pharmacies, grocery stores, and online retailers. It'll be available for consumers to purchase at thousands of U.S. pharmacies as early as next month.
Now, shares of Emergent Biosolutions right now up about 12.5%. Grayscale Investment CEO Michael Sonnenschein says the court ruling to overturn the SEC's block of his firm's proposed spot Bitcoin ETF is a huge win. Now, he spoke earlier on Bloomberg.
One of the interesting things that we actually got from the court in yesterday's decision was that the court agreed with us that the arguments we've been putting forward all along throughout this process are such that the SEC already has the tools it needs to approve spot Bitcoin products like GBTC, that there is sufficient surveillance between the CME, where Bitcoin futures trade, and national securities exchanges like the New York Stock Exchange, where we intend to list GBTC as an ETF.
Now, you can hear that full interview on the Bloomberg Talks podcast feed. Download it wherever you get your podcasts. And CNN has a new chairman and CEO. Mark Thompson, a former president and CEO of the New York Times, reports to Warner Brothers Discovery CEO David Zaslav on October 9th. Shares of Warner Brothers Discovery right now, they're up about 1%. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Push that blue button. Looking at these markets right here, we got the S&P 500 up 0.4%, the Nasdaq up 0.6%. So we got some good, solid movement there on the yield front. Looking at the Treasury market, the 10-year right now is being quoted at 4.10% on your 10-year. WTI crude oil kind of steady here, up about 0.3%, $81.47 for a barrel of the West Texas crude there. Gold a little bit higher here, up about 0.4%, $1,945 an ounce. We will call it there. Right now, let's go to Denise Pellegrini in New York with World and National News.
Hey there, Paul. Well, Hurricane Idalia is now turning some of its attention north of Florida. Bloomberg meteorologist Gary Best tracking developments for us.
Idalia is located across southern Georgia right now, moving to South Carolina during this afternoon and evening with flooding rains likely for southern Georgia, North and South Carolina as well. Idalia is moving off towards the north-northeast right now at 20 miles an hour. Sustained winds about 85 miles an hour. The storm continues to weaken very slowly right on through this afternoon, and especially tonight and tomorrow.
All right, thank you, Gary. Gary Best reporting there. Meantime, FEMA official Matthew Payne says damage assessment in Florida is already underway there.
Administrator Criswell in Florida to work directly with the governor to ensure that as they have requirements, we're able to meet those as soon as possible.
And Florida officials also warning it's not over yet there. Dangerous flood conditions, multiple power outages there. Also watch for flight delays just about anywhere in the U.S. today to be amplified. More than 1,000 domestic flights are canceled already today, according to FlightAware. Russia could be about to get access to more weapons. The U.S. has new information. Russia and North Korea are negotiating arms deals under which North Korea would provide President Vladimir Putin's army with munitions and other support for its invasion of Ukraine, and that is according to the White House. And U.S. health officials are recommending easing restrictions on marijuana. A top official at the Department of Health and Human Services is asking the DEA to reclassify marijuana as a Schedule III drug under the Controlled Substances Act. It's currently a Schedule I substance. That includes drugs with a high abuse risk like heroin, so switching it to Schedule III, that could dramatically increase business prospects for the legal weed industry. Global News 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. In the newsroom, I'm Denise Pellegrini. This is Bloomberg. Paul, back over to you guys.
All right, Denise, thank you so much. We appreciate it. Jess, why is the Round Hill Cannabis ETF under the ticker WEED, why is it up 21% today?
21% on pace for its best day since October of last year. So pot stocks are jumping on this call to move marijuana to a low-risk category. So you're looking at that surge there. The U.S. Department of Health and Human Services did send a letter to the Drug Enforcement Agency urging them to loosen those rules on cannabis. If you look at BI's Global Cannabis Competitive Peers Index.
Bloomberg Intelligence, the business I helped create.
Yes, I just wanted to throw that out there. Did you not know this?
I didn't know we had a weed stock index.
So there is, and it's up almost 9%. So BIGLCBCP.
Oh, I'm there. That sounds like a BI index.
But also, if you want to look at individual names, Tilray, ticker symbol TLRY, up 12%, on pace for its best days since August 8th. And then you also have other shares like Canopy Growth surging as well. Both of those advancing, double digits on the news of this. And also, I mean, this is really a burst of optimism following the election, obviously, of Biden as president back in 2020. And so these pot stocks have been dealing with as far as just delays to changes with as far as especially when it comes to regulation and obviously its status as an illegal drug there. So you are seeing a big pop when it comes to this particular corner of the market today, Paul.
I was at the U.S. Open out in Queens yesterday. Great day, great event. They do a phenomenal job out there. But it was the first time I smelled weed.
Really?
Just kind of wafting through the stands. I'm like, am I at a Dead concert?
How was that?
I mean,
it was a Dead & Co concert. It was the U.S. Open.
It was the U.S. Open. I mean, it was a new experience, but it's everywhere, I guess. I mean, it's
out there.
I think that's kind of what they want. So we'll have to see how this goes, I guess, state by state. So
I'm glad you learned, though, that you're the BI that you helped create has an index tracking these
places
days.
Obviously, gone downhill since I left. But it's good stuff there. They cover all of that stuff. 1,200 companies, 130 industries. Right now, Sound On with Joe Matthews starts right now.
here, we're still below where we ended last month, so still down on the month. We're looking at the NASDAQ 100 seeing an even bigger gain, but remember, a lot of this is on the back of softer economic data. This is another day ahead of a big job day ending the week. Now, when you look at the two-year yield, you're looking at a 486. That is 19 basis points below where we ended Friday. So massive volatility in the bond market, a real bid in bonds. Then crude up for another day. You are still looking at an 81 handle on crude oil. However, that is still a fourth day of rises in crude as well. Now, we've been talking about that economic data. A number of indicators this week that the U.S. economy is moderating. Here is what JP Morgan's Kelsey Barrow thinks this data means for the Fed.
When we look at the trajectory of the data, the totality of the data, first inflation, then labor market, and then secondarily the GDP data, we think that they are going to be getting confirmation that policy is sufficiently restrictive.
Bloomberg Economics chief U.S. economist Anna Wong joins us now from D.C. Anna, with this data that you see already ahead of other pivotal data, PCE, jobs, how do you take stock of what we're already seeing?
Yeah, I think the tricky thing for the Fed is to, in the next couple of months, is to decipher the signal from the noise. There are going to be a lot of noisy data that suggests the inflation is actually bursting and that GDP is going on a gangbuster rate. But I think the tricky thing is that the Fed should look through those signs. So tomorrow we're going to get a PCE report that probably shows that Powell's preferred inflation metric, the super core, would be accelerating from the previous month. And that's due to this esoteric category that's related to finance. And but outside of that, in fact, the picture is looking better in terms of inflation. So I think the trick is, will the Fed look through those noises?
Another piece of noise here is the idea that the JOLTS data showed some softening, typically an indicator for wages moving forward, but we get the real wage data later this week. What are you expecting?
We are expecting that average hourly earnings from the payroll report to show a pretty soft monthly print, and that will be paired with the income growth also showing a softening. So when you look at this picture where you have softening wages and income growth, but on the other hand, spending is still very robust, that makes you wonder whether this consumption boom is sustainable going into Q4, and our answer is no, it's not, that the consumers are going to retrench in the fourth quarter.
How much does this week's data matter when you look at the direction of rate hikes ahead? You look at the market expectations, and this massive leg down in yields shows that the market is expecting some significant cooling here. Are they right to expect that?
Yeah, I mean, we definitely think they are right, because the data has been moving toward what my team has been forecasting. We have been saying that there would be a significant weakening in growth in the fourth quarter. We're still expecting the recession to unfold then. We also have been saying that the labor market is actually cooler than what all these data have been suggesting in real time. And certainly the downward revisions to the JOLTS data, which you mentioned, is actually supporting our thesis.
Bloomberg Intelligence's Anna Wong, thank you so much for your time. Wall Street investors are also watching the policy moves over in China, and here's what Seth Carpenter of Morgan Stanley is watching.
Every corner of the world has its own quirky story. I mean, I think for us in the U.S., there's definitely the slowdown, the soft landing, but boy, the data are surprising to the upside. In very stark contrast, on the other side of the world, I'm always in conversation with my team in Asia. China, we had come into this year pretty bullish on China. The first quarter was super strong, and now things have slowed down a great deal. And so the question is, when do we get enough of a policy response from Beijing to pull things back in?
Stefan Seelig is Bridge Park Advisors managing partner, who was also Undersecretary of Commerce under the Obama administration. It's been such a landmark week when you have Commerce Secretary Gina Raimondo visiting China. But when you look at the headlines, it's kind of a lot of what we've already expected, what has already been telegraphed. How sensitive is the relationship now between the U.S. and China, particularly on the heels of a flurry of moves we've seen from the Chinese government to prop up their own economy?
Well, look, I think both sides are keenly aware of how important the relationship is, and they're very focused on maintaining it. The fact is, as you rightly point out, that a Commerce Secretary or Undersecretary has not been to China for 5 or 6 years, so they are resuming, frankly, what had taken place in the past. And I think that's very important and productive for both sides.
When you think about not just the Commerce Secretary's own trip to China, you also think about this trip that President Xi is going to be making to Moscow as well. How sensitive is the relationship between China and Russia, and the U.S. and China, and the U.S. and Russia at this point in time? It's quite the love triangle if you take a look.
It is, although the commercial and economic relationship between the United States and China has primacy. There's a obviously geopolitical and diplomatic relationship between China and Russia that's increasingly important. Our economic relationship with Russia has never been particularly important, but China and the U.S. are the 2 largest economies in the world, and our ability to cooperate is central from that perspective.
Besides your own experience in Washington, you also have close ties to corporate America. You advise many CEOs on how to work around this when their supply chains are also so heavily tied to China at this point. Geopolitical tensions are on the mind of many CEOs these days. How do you answer to their concerns around how the U.S. is navigating the relationship with China?
Well, I think the most important thing now is we're reestablishing a dialogue and an ability to communicate with China, which hasn't existed particularly effectively over the last couple of years. When CEOs and companies are actually quite good at navigating different environments, even stressful environments, what people aren't particularly good at is highly volatile environments where predictability is uncertain. So I think actually now starting these 2 dialogues, so the Secretary announced that there are 2 separate tracks of dialogues that are going to recommence. One is a commercial dialogue where business leaders from both sides are going to be a part of it, and the other is going to be an export restriction dialogue that is going to be quite separate, that is going to help the Chinese better understand what we're doing around export controls, because those 2 things have become a bit muddled, and they are thinking that all these restrictions that we're putting in place are frankly to suppress their rise in development as opposed to protect our own national security interests.
The other reality is that there are many investors that are exposed to Chinese equities through ADRs. There's a lot of private equity that views China as a massive growth area despite the current slowdown. There's a lot of venture capital that has made a lot of money investing in Chinese technology companies over the years and wants to reharvest that money into more future Chinese companies. When you look at the Biden administration's moves, how do they impact U.S. investors the most at this point?
Well, China is an extraordinarily important customer for United States companies, which is why we've tolerated their behavior for so long. I always said that they have 1.4 billion reasons why we tolerated some of their theft of intellectual property, amongst other things. But we can be both competitors and they can be customers. And I think that's the very narrow world that we're trying to navigate. As it relates to private equity and venture capital investments in China, as you know, the Biden administration issued an executive order limiting investments in certain key technology sectors. I'm not sure I follow that bouncing ball particularly well, given the surplus of capital in China, but I think that really this is just another example of the tensions that both sides are trying to ease to be able to work more effectively.
Now, when you look at the economic data coming out of China, what concerns you the most? There's in this conversation we've been having here about whether the market really wants to see a bazooka of stimulus or whether they need to start seeing this economic data turning around. How do you feel about it?
Well, I'm not sure there's any data that doesn't give me some concern. So you just kind of tick it off. Their economy is slowing. It's been growing at double-digit levels for decades. It's now going to be roughly 4.5%, which is still double ours, but dramatically slower. The renminbi is depreciating. Foreign investment in China is shrinking. Consumer confidence is going down as consumers are looking to save more and spend less. There's a real estate crisis in the making. There's a whole host of things that China's leaders are concerned about, which frankly they haven't had to face over the course of the last couple of years. And what I would say is, as President Xi has reasserted control over the economy, that has exacerbated some of these issues.
Do these issues make the relationship between the U.S. and China more or less tense?
Well, I think it makes it more important to navigate because this extreme competition that we have with China also demands intense diplomacy. And that's frankly what Secretary Raimondo is over there to re-engage with.
So when you look at what is happening in China with economic data, how much worse do things get before they get better?
I don't know. That's that's the $1 trillion question, I guess. You think, given the overdevelopment in real estate, there's going to be some real continued stress. Youth unemployment is rising. There's a kind of a deal that China has, the Chinese population has made with the Chinese Communist Party, which is, we will let you control the government, and obviously in a heavy-handed way compared to the way we think about it in the West. But the quid pro quo of that is you are going to continue to create prosperity in China. And this is the first time in a very long time where confidence is down and the Chinese population is worried about continued wealth creation in the country.
Stephen Seelig, Breach Park Advisors Managing Partner, we thank you so much for your time and for your experience. We appreciate you on the show. Coming up next, we're going to talk private markets with TKO Capital co-founder Mathieu Chabran. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think of myself as a realist, trying to see the world as it really is and not the way I'd like it to be. And sometimes I succeed and sometimes I fail in that.
This is Bloomberg Markets, and I'm Shanali Basak. We're expecting to see a busy September in the junk bond and leveraged loan markets with at least $15 billion of committed debt that could come to market after Labor Day. TKO Capital co-founder Mathieu Chabran joins me now. His colleague recently told Bloomberg he expects more bankruptcies and defaults ahead. Mathieu, with that backdrop here, this idea that some things can get worse, realistically, how much optimism can investors meet these junk deals with?
Listen, the market reopens. It's a good news. Let's see what happens after Labor Day. We all know that it's an important, time, this year. You know what I really focus on, Shonali, is, there is the supply, but it's also the liquidity and what's the cost of liquidity. Realistically, what has happened over the past 12 months, if you look at the former LIBOR here in the US, the SOFR now, or the Euribor in Europe, it has, widened by 300 basis points or more. And that's just the cost of liquidity to get the seat at the table. So you start at whatever, 3.8 in Europe, 5 something, in the US. Then you had the credit spreads, okay? They have doubled, more or less, over the past 18 months. So today, a borrower is starting with a cost of debt which is more or less high single, low teens cost of debt. We come from zero, remember, or not much more than zero. So I think what we should all be focusing on is, the supply. There is a cost of debt, the cost of liquidity, but also how much supply can be absorbed by this market. But more importantly, what do borrowers do with that?
Yeah, what do borrowers do with that, especially with this higher for longer narrative? You are also seeing this global divergence, this concern that the ECB could be moving now at a different pace than the Federal Reserve. What does that mean for an investor globally?
Yeah, so it's interesting because effectively ECB has been lagging to a certain extent relative to the Fed, who's been much quicker, to react over the past few quarters. But by the same token, the leverage market that you were talking about starts from a different standpoint in the US and in Europe. If you take the private credit markets, for example, you have some public data. Average of the private markets leverage in the US is 6.5 times debt to EBITDA. In Europe, it's more like 5.5. Prudent managers like us, we're more like 4.5. So it's also, how do you enter this cycle? How do you enter this cycle in terms of liability, in terms of debt? And so today, when the ECB is catching up, and they have to, look at what the most recent data that came from Germany, on production, on salaries, they have to catch up, somehow. So there's certainly operating in isolation today, but from an investment standpoint, it's a great market to be in, to be able to navigate both sides of the pond. Because as the leverage finance market reopens, and that you have this massive bid from investors to compound. Now when you can effectively lend and originate at 10%, that's what people want. Give me 10% for the next 10 years. So it's a great, people have been talking about the golden age of the credit market, the private market. It'll be a very interesting time to get in.
Let's talk about that golden age, because if you were a liquid investor, a liquid market investor, you look at the private markets, and let's use what Cliff Asness calls it, volatility laundering, this frustration that you're maybe not seeing some of the pain under the surface. You are actually seeing some pain under the surface. You're seeing private equity bankruptcies at a 13-year high. You are seeing defaults in some private credit deals as well. How much pain do you expect in a market that is just clamoring for fresh money?
If I want to answer simply your question, I would say only more. I think that's what is ahead of us. I've been saying for a little while now that some buyout firms were a little bit in denial, in terms of the equity, underlying, equity value. Today, you've got some highly levered assets that have to refinance one way or another. As we just said, the cost of debt is probably twice, if not more, what it used to be, to the extent that you can raise, this debt capacity. So there will be some needs to effectively, you're talking about the pipeline coming next week, but there's also a lot of amend and extend coming. And remember what happened last cycle, 10 years ago. You start with the amend and extend, and then you got the extend and pretend, and then effectively you might get into the reckoning moment for the market. And so I think it's better to anticipate that.
What about this idea here? You've seen record-breaking private credit deals above $5 billion. And the amazing thing is one of those underwriters, Blue Owl, their co-president had told me that they can go from $5 billion to $10 billion in just a couple of years. How much risk is this market willing to take on? And is it going to take away the capacity from the banks that are so excited about, frankly, a measly $15 billion in September?
Well, I think it's a great news because this market is now getting very institutionalized. And all these asset managers, that can effectively step forward when the banks or the public market are not open is a great news for, the capital market functioning, correctly. Now, on this very large transaction, and we are at TKO, involved in some direct lending, we focus on the mid-market because I've always questioned where do you have to compromise as a manager to be more competitive than the public market when they are open, right? And the rule number one of credit investing is diversification. So if you want, 5% of your fund in any single credit, it means that if you are underwriting 10 billion, you need a 200 billion fund. And I know that, with all the success to these competitors, nonetheless, friend of ours that you are talking about, we're not there yet, right? So I don't think that big is better.
Mathieu Charbon, we thank you so much for your time and your realism ahead of a very busy season ahead. That is the TKO Capital co-founder. Now, the FEMA administrator is speaking at the White House right now. She is discussing Hurricane Idalia making landfall earlier today in Florida. You can watch these comments on Live Go on the Bloomberg terminal. This is Bloomberg.
It's still unsafe in many parts to even go out. That's what's going to happen over the next several days, is to really get a good understanding and initial estimate of what we think the costs will be and what the amount of impact to these communities has been.
And money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
This is Bloomberg Markets. I'm Shonali Bassick, and it's time now for Wall Street Beat, my favorite beat. It's turning down to a slowdown in the hedge fund industry. It's specifically for the funds run by Tiger Cubs, the names given to the proteges of Julian Robertson. And for more, we're going to bring in Bloomberg's Hema Parmar to talk about what's going on, because the numbers, they are pretty abysmal. When you look at the fundraising numbers relative to prior years, you've written it, they're clamoring to get into those funds before, and now they are clamoring to get out. And so how much have client assets dropped by? Is it mostly outflows? Is it performance? A combination?
So what we tracked here are actually from the Form D regulatory filings, and it shows inflows from U.S. clients alone. It doesn't take into account redemptions, but it does show us the demands that investors have had for these funds over the past 12 months. And what we've seen is a very stark decrease, a real significant drop, as much as 99%, 81% for some of these funds that generally performed pretty badly last year. And so these are some of the biggest names in the hedge fund space, biggest name stock pickers, some of the best performing historically, but they've had a very difficult, rough year last year, and so perhaps it's unsurprising that investors have been less keen on investing their capital in those funds over the past 12 months.
Trend you've been all over. You know, you have D1, for example, where more than a third of their assets are tied into private capital. You've barely seen an IPO market this year. How much are investors staying away from that private market bet versus what you're seeing in this general technology investing? Because obviously the market was down last year. Obviously the market is up this year, but it's really that pocket of privates that people are very worried about.
Yes, especially as some of the funds have had to side pocket those privates. So now you couldn't get out before, but now you definitely can't get out. So I think there's been a bit of a change in sentiment when you look at the crossover funds, and as some of the people we quote in our story have said, it's sort of lost its luster. partly because the tech stocks have struggled over the past year, and also because a lot of these guys really pushed very fervently into privates. And now, you're struggling to IPO. There are few IPOs. You're struggling with the M&A market. There just isn't as many ways to realize those gains. And if you do realize them at a significant upside. So you're seeing a lot of activity on the secondary market broadly right now, and you're seeing people trying to reconcile the bid-ask spread to get a sense of what is this stuff really worth.
And that's on the exit side, but what about this idea of the funds that were either closed to new capital and why they brought new investors in, and the overall fundraising environment? You had mentioned that this was the inflows, but it's worth noting Lunchtime, for example, you saw the inflows, but Kathy Burton just a day or two ago had written about this idea that in the span of a year, $3 billion was pulled from Lunchtime alone.
Yes.
So can they raise enough money here to meet all of those outflows?
So for years, Lone Pine was closed to new capital. They've seen redemptions over the past couple of years. It's been a very difficult, rough road for them as well, too. And I think what you're seeing is now they're opening up. They're more likely to accept capital after a difficult year. The question being whether investors will want to invest. There's this idea of a fund being closed to new money. Tiger Global and Viking were both closed over the period that we looked at. But even if a fund is so-called close to new money, we've seen them in the past take in $1 billion, and that's to either replace redemptions or to make exceptions for impressive, influential investors. So even if a fund is so-called close to new money, that doesn't preclude them from taking in new money. So if they're closed and their inflows are still down to the degree that we're seeing, it may suggest that the wait list of investors we're looking to get in has shortened.
That's Bloomberg's Hema Parmar. Brilliant story today on the Bloomberg terminal. Make sure you take a look. Now, coming up, 21 Shares CEO Hani Rashwan joins us to discuss the looming ETF deadline for the SEC for his Bitcoin ETF application. Coming up next, this is Bloomberg.
And money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
Cornhole's one of the only sports in the world in which you can have male and female players playing at the highest level against one another.
I'm Jason Kelly, a business journalist and sports fan with a couple decades covering Wall Street.
Getting involved from a business perspective was something that was very natural and easy transition for me.
I'm Vanessa Perdomo, a former college athlete and journalist working across media.
Let's do it.
All right, you ready?
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
I got a point! From the pickleball courts of Arizona
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Bloomberg.
I'm John Ehrlichman. Welcome to Bloomberg Markets.
And I'm Shonali Bassick. John, I'm taking a look at the markets here. Another day of green on the screen for the S&P 500. And if you take a look, we are still down on the month of August. Definitely a red August. But we are up 0.4% on the S&P 500. Even more on the NASDAQ. We're up 0.5% on the NASDAQ 100. And if you take a look at the crude oil as well, trading a little bit higher at 81. That is cooling in terms of rate of change from the prior day, but still higher for yet another day. We were looking at 79 last week, so inching higher there. I also want to take a look at the 2-year yield because at 4.85, we are looking at a 3 basis point move on the day. Yields cooling once again on softer economic data. But if you take a look of where we were just last Friday, it is just a stunning surge downward with more economic data still left to the week.
You know, Shonali, I'm glad you highlighted both what's happening in the fixed income market, but also what's happening with tech, with that NASDAQ performance today, because we got a lot of tech stocks to run through here. I want to start with some news that Mark Gurman of Bloomberg just broke on the possibility of Apple integrating more 3D printing into its business, specifically into the manufacturing process, which would be a sizable change for the way it operates its business. And that not only got Apple investor attention, it got the attention of investors in 3D printing player 3D Systems. Stock right now is up close to 3%. It initially spiked almost 10%, although this coming on a day when we got a fairly sober outlook from HP, the PC maker, with a disappointing outlook, and those shares are still down about 7%. Plus, we've got Salesforce after the bell. So a lot of tech news today. And then we're also watching both cannabis and spirits plays today. I want to talk about Tilray, which trades on both sides of the border, and actually some Bloomberg reporting about some possible changes in Washington that could support the industry, result in quite a spike for that stock, which is up about 9%. Brown-Forman, the maker of Jack Daniels, by comparison, Shonali, right now down about 4%. Seems like there is an issue with enough inventory at some of its distributors right now, and that has impacted the sales picture.
And now over to crypto, because a lot of news this week. A 3-judge appeals panel in Washington handed Grayscale a big win on Tuesday in its case against the SEC, and it potentially paves the way for a spot Bitcoin ETF. Earlier today, I spoke with Grayscale CEO Michael Sonnenschein about that news.
We will have to see upon the final operational procedures that come through that final mandate that the court will issue.
So you don't know, but you may?
We don't know what the final opinion will say until we reach the end of that period, correct?
Is there, I've been reading stuff from yesterday too, that, you know, you may have won this battle, but then lose the war, and that there's a bunch of other competitors now. So now you're not going to be the only horse in town.
Yes, so this is a topic we've talked about before, ladies. It's really a world in which there are multiple spot products is a world that Grayscale has long been ready for. There are multiple Bitcoin futures products. We believe that there will be a world in which there are multiple spot Bitcoin products. That being said, we want investors to have choice, and some of the things that we do think investors will look to when they are making those allocation decisions are the size of the fund, the liquidity of the fund, the track record of the fund, right? Let's not forget that GBTC is the largest Bitcoin fund in the world. It's owned by millions and millions of investors. It has 3+% of the outstanding Bitcoin supply, and really now has almost a 10-year track record of operational success, right? Whereas a lot of the other products coming to market are really making use of GBTC's operations, disclosures, reporting, and GBTC is really paving the way to broaden out disrupt that market.
There's another massive market question here, and it's not just about the pace and time, it's about the structure and the fees. Because if you look at BlackRock, Invesco, Fidelity, these are asset managers with a history of coming in low. And if you look at the fees that you have offered, and really has made a very profitable entity for Digital Currency Group and Grayscale, how much lower exactly can fees get for the Grayscale product in the form of an ETF?
Well, what I've committed to historically, and will say again to you today, is we are committed to lowering fees when GBTC converts to an ETF. We'll obviously have to come back on and talk to you about what the fees are when that conversion actually happens.
So the other strangeness here is the discount that the GBTC is currently trading at. You had gone from 24 yesterday to 15 below net asset value, back to 20. Can you answer to this market volatility here and the uncertainty that investors are grappling with as you head towards this process?
Well, there's a couple of things in that dynamic. So number one, there certainly was increased trading volume yesterday in GBTC, a lot of excitement and enthusiasm based on the victory that GBTC shareholders had in the court yesterday. Now, as we eventually approach an ETF, you'd expect that eventually there will be an arbitrage mechanism through the ETF that will allow for any premiums or discounts to be eliminated. That's a really, really important function of why ETFs serve in the capacity that they do. And it's really the core of what we've been fighting for throughout this entire lawsuit, right, is to ensure that the optimal investment structure is there for investors, and we do eliminate any premiums or discounts.
Michael, have you heard anything from the SEC over the past 24 hours? Any updated communications or questions?
We have not heard anything from the SEC, only just from public reporting. We've seen certainly that the SEC is reviewing the decision, much the same way my team and my legal team is reviewing the decision as well. And again, it is our intention to continue to have a proactive and constructive dialogue with the SEC during this 45-day period.
I guess the other question becomes, why here versus if crypto and Bitcoin is going to become a hotter topic overseas, right? Why launch here? Why not go somewhere else and launch?
Well, this is the center of the financial markets and capital formation.
Yeah, but clearly the U.S. government does not like crypto.
Well, you know, from my standpoint, Grayscale, now coming up on 10 years of operational history, you know, we purposely decided to set up shop in the U.S., make use of existing rules and regulations, and it's our intention to continue to do so, right? Enabling investors to access this innovative asset class, but in a way that feels traditional, familiar, and again, within those regulatory, constraints that they're often used to.
That was just some of our conversation earlier with Michael Sonnenschein of Grayscale. Now, another group filing for a spot Bitcoin ETF is Cathie Wood's ARK Invest and 21 Shares. Let's bring in 21 Shares co-founder and CEO Hani Rashwan. When you take a look at the deadline that the SEC is facing to give you an answer, finally, they have certainly punted for a while now. What are you finally expecting?
Well, the news from the Grayscale lawsuit is incredibly positive. We still don't know precisely what it means, but the main reason that the SEC has been using for the last decade to reject all of these Bitcoin applications has been struck down, has been taken off the table. What will be really interesting to see with respect to the Grayscale case is about 7 days from now is when the SEC should share more on whether they'll have to refile from the very beginning or if some surprise is coming. And our expectation would be that it's likely that from a pragmatic basis, they have to refile.
Now, you've had Cathie Wood say very much that the SEC could approve multiple Bitcoin ETFs at the same time. How much interest are you thinking that the industry could get on the onset, and how are investors going to be differentiating among the products?
So we've been running the world's largest product suite of crypto ETPs globally. Most of our business is in Europe and Asia, just due to the regulations. And what we've found out is that a number of issuers is actually the best thing for the end customer. They get more products in more varieties and more types. And I would imagine that we would continue to do that.
And Hani, we heard Michael say that in terms of any new communication or interaction with the SEC, it sounded like it had been muted so far. I guess I'll ask you the same conversation. Have you or your team had any interactions over the last 24 hours?
Not over the last 24 hours. We do have a number of filings with the Securities and Exchange Commission, so we discussed those kinds of filings as well. With respect to the SEC, I think it's important to take a step back and just realize how unprecedented this action is. You could probably count on two hands the amount of times that the SEC has had a ruling like this from an administrative perspective. And I think we still don't fully know what is likely to happen, but over the next week or so, we should find out a lot more.
So we'll see what happens on that front. I guess some of the issues that we've heard from regulators like the SEC on subjects like market manipulation or even just protections for retail investors, these are still going to be industry things that have to be addressed for the longer term. How are you approaching that?
In the same way that we've approached them globally, we're listed on the top exchanges of Australia, Switzerland, Germany, France, etc. Over a dozen listings for 40-some products. There are investor protections, there's collateralizations, we don't have discounts or premiums, and there's a very easy way within the confines of the ETF universe and the rules we've already created to build exposure to crypto in a safe, accessible, regulated manner, which is ultimately what the customers are asking for, both in America and around the world.
The SEC has posed concerns over and over, really, about this concern about market manipulation and retail investor protections. What are you doing to address those concerns?
So a lot of that is why you've seen these surveillance sharing agreements within the new rulings.
Does that fix everything?
It's a majority of American trading crypto volume, since Coinbase is really well represented here. That's a sizable market with sizable flows. We guarantee that the funds and the underlyings come from those sources, and then from the regulator's standpoint, they get to view, they get a look in, they can investigate, they can monitor any potential transactions that they may have issues with. So that should, in our opinion, address all of those concerns.
And Hani, let me just ask you about market reaction as well. At least if we're looking today, obviously you saw at least some of the crypto shares yesterday on the move. But it does seem like, at least based on today's action, you could characterize this as a muted market reaction. What's been your assessment of how the investment community is viewing all this right now?
So the cryptos have increased 5 to 10% across the board, which is very good, especially over the summer, and especially in the bear market that we're in right now. It's hard to really predict how big this is, but there is no doubt that this is a massive, massive, massive deal. We think that up to 10% or more of all of crypto, specifically all of Bitcoin, should be within an ETF format within the next 5 or so years. That's our internal estimation inside. And obviously that's a very large market that's quite attractive.
What has changed? Because for somebody that has really been through this process for a while with the SEC now, what are the biggest things that could bring the industry closer, given that you face denials and delays already? Has anything materially changed?
So the strangest thing is that this is actually not that unique to the United States. We experience this with regulators around the world. It often takes time, and if I had a nickel for every time we've been rejected, maybe we wouldn't have to do this anymore. We're addressing their concerns. We're addressing their concerns, and the market has really matured in myriad ways. The regulations have increased. Places like Europe are introducing them. The market participants, a lot of the more fraudulent players have been washed away. And what we have with respect to our ETPs globally is a 5-year track record showing no discounts, no premiums, proper creates, redeems, proper investor protections, and following the regulations within the confines of what we already have for the ETF space.
And to your point, Hani, I mean, here in Canada as well, we've got a fairly robust Bitcoin ETF landscape that has been developing as well. Great to get your perspective. Thanks so much, Hani Rashwan, 21Shares co-founder and CEO, joining us. And we'll continue to track that crypto story. Coming up, though, regional bank stocks being impacted after a number of warnings from the Fed. We'll have more details next. This is Bloomberg.
invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. And even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that, this is something that, many business leaders are focused on, and, time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at the 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been and will continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Markets. I'm John Oakman with Shonali Bassuk. Time now for our stock of the hour, or stocks of the hours, because we're tracking regional banks after a scoop from Bloomberg. U.S. regulators quietly demanding that regional lenders shore up liquidity in the wake of 3 bank failures earlier this year. The Fed issuing warnings to the likes of Citizens, M&T, and Fifth Third, according to people with knowledge of the matter. And the focus here seems to be on institutions that have assets between $100 and $250 billion. Bloomberg's Sally Bakewell joining us now to talk more about what the team has been uncovering. Sally, let's just talk about the balance sheet concerns and how the regulatory landscape is changing as a result here.
That's right. So these warnings, they come amid this heightened scrutiny on anything at banks funding related, liquidity related, and deposit related. And that's because, in the aftermath of Silicon Valley Bank's collapse, in the autopsy of what happened, the Federal Reserve actually found shortcomings in its own supervisory actions and processes. So regulators are watching very closely for this Category 4 bank, as you outlined, which includes banks like Citizens, M&T, Fifth Third, Huntington, to make sure that they sort of have adequate liquidity planning, to make sure that their compliance and IT processes are up to snuff, to make sure that they can have access to things like the Fed discount window, which is this funding mechanism that they use to help manage their liquidity. And it's also that the Fed and regulators, they don't get sort of caught having missed trouble brewing again. And of course, to send panic in the system from spreading.
There's tighter supervision. There are more rules ahead for the system. There are demands for corrective actions. How much of a hangover is this from the banking crisis that can portend even more of a hangover from the banking crisis?
I mean, it's a huge part of the consequences of what happened. So while the immediate, that sort of drama seems to have faded, those persistent concerns remain. And now banks are facing, what could potentially be costly and serious measures. These warnings, they're in the form of matters requiring attention or matters requiring immediate attention. Now, they're not uncommon, but banks, board level has to reply with a timeline of corrective action. And if they don't address these things in a timely fashion, they can morph into more serious public orders, and potentially they could face monetary penalties.
Now, Sally, really quickly here as well, if you think about the banks that are being asked to face these private warnings here from the Federal Reserve, it's Fifth Third, Citizens, banks that did not face as dire problems as Silicon Valley Bank faced, for example. So what does this mean for the continued pressure that just take a look at those banks there intraday, that a slew of banks could face moving forward for a prolonged period of time?
Well, these banks are all in the same category as the 3 banks that failed earlier this year in. So this is the category that is getting a lot more scrutiny from regulators. It was a category that it was actually exempted through 2018 legislation from being required to recognize unrealized losses on the balance sheet. Now, unrealized losses pertaining to these securities that banks all piled into really came under the spotlight in this crisis. So they're just really trying to ensure that they've got a handle on exactly what banks have on their balance sheets and what banks don't, to ensure that none of that ever happens again.
Bloomberg's Sally Bakewell with the Bloomberg Scoop that is reading high on the terminal. Stocks a little lower for the regional banks. Now coming up, as Hurricane Idalia slams Florida and the Southeast, we're going to look to the potential cost to the insurance industry. That's up next. This is Bloomberg.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. It is then the market forces and the business incentives of global companies that transform that EU rule.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is Bloomberg Markets. I'm John Oakman with Shonali Bassick, and Hurricane Idalia is spreading damaging winds and heavy rains inland after making landfall on Florida's west coast as a Category 3 storm with maximum sustained winds of 125 miles an hour. It's now threatening other parts of the southeast. Bloomberg Intelligence senior insurance analyst Matthew Palazzola joining us now to talk a little bit more about the business costs associated. Obviously, you want to make sure everybody's okay, but it's hard not to think about some of the costs we've seen in past instances. But Matthew, I know that when you compare it to, say, something like Hurricane Ian, which I believe we were talking about $112 billion worth of damages, your current team estimates are much smaller by comparison.
Yeah, much, much lower. So the thing is, this storm hit a pretty sparsely populated region of Florida, that Big Bend region. The population density is about 90% below the average county in Florida. So there's just less stuff in the way to get damaged.
So what does this mean for the rest of the season? Is this going to shape up to be a season where you see losses that are in line with prior years?
So far, yes. We haven't hit the peak of hurricane season. You got about 2 more weeks to hit that. We have record sea surface temperatures, which feed hurricane activity. So, I'm not optimistic for the rest of the season. As of right now, there's nothing we're watching in the Gulf, but it could shape up to be an above-average season.
Now, Matthew, I think there have been a lot of headlines today about Berkshire Hathaway's reinsurance exposure to a state like Florida. But as for some of the key insurers that are tied to that market, whether it's a Progressive, an Allstate, a Chubb, can you just walk us through how the insurance landscape breaks down in that state?
Yeah, so public companies, you've got Allstate, you've got Chubb, AIG has some exposure, Progressive, as you mentioned. I'm not too worried about any of them. I think maybe Allstate might see the worst of that group. State Farm is a mutual company. It's not public, so they have a big exposure as well. The biggest home insurer in the state, though, is Citizens, which is the state fund, and Berkshire Hathaway has a reinsurance exposure to Citizens.
Now, if you look at the other companies that have entered or exited the market, where is the exposure a little bit overweight here? Because you have seen a lot of players exit Florida in the last year or so.
Yeah, so it's probably Berkshire Hathaway's exposure is really big, and that's in reinsurance, which is insurance for insurance companies, aside from the state fund, which is backed by the taxpayers. I'm not worried at all about Berkshire Hathaway's exposure here. The losses would have to get significantly higher for it to hit Berkshire's reinsurance level.
All right, Matthew, just going back to Shonali's question about what to be watching as we go through hurricane season, which we're really in the early innings of, typically takes us through November. How do you think others are going to be preparing within the industry, even if in a positive development, we don't see a worst case situation unfolding in this particular example?
So it would be very good for a mild average hurricane season. What has happened is reinsurance prices, like we were talking about, have gone up dramatically. So a lot of companies have stepped into that space. They're kind of hoping that we don't see, a Hurricane Ian like we did last year. If that happens, I think it bodes well for the whole industry. It may even bode well for insurance prices in Florida, which have been kind of going through the roof.
Our thanks to Matthew Palazzolo of Bloomberg Intelligence on a very scary storm. For John Ehrlichman, I'm Shonali Bassick. And the last check of the markets before we let you go, you're still looking at the S&P higher, John. You're looking at 0.4% higher on the S&P, but I will still point out you are looking at a down August.
Yeah, we've seen obviously some of the technology stocks finding some buying strength today. We'll continue to track stories such as that Apple scoop from Mark Gurman on the possible 3D manufacturing changes at the Cupertino company. And then, of course, we've got Salesforce after the bell with numbers. For Shonali Bassick, I'm John Ehrlichman. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
The top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening. Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
Prices and bond prices, too, heading for a fourth straight day of gains. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostic.
And I'm Katie Greifeld. Kicking you off the closing bell here in the U.S., we're looking at another day of gains on the S&P 500. Let's not jinx things, but this is turning into another up week. The S&P 500 looking at 0.3%. Nothing to write home about, but still positive nonetheless. Big tech doing even better. The NASDAQ 100 up by about 0.4%. And once again, you're seeing yields fall. Let's take a look at the 2-year Treasury yield, down about 3 basis points. Of course, it was down double digits yesterday, so really seeing a lot of buying coming back into the Treasury market, particularly at the front end. Now swaps are pricing in less than a 50% chance that we get another rate hike this year. And I did want to highlight Bitcoin, of course, Romaine. It was a big day yesterday. Starting to see that cool a little bit. Bitcoin down by about 1.5%.
Yeah, we'll be keeping an eye on some of the crypto-related stocks, but also keep an eye on the insurers, on the airlines, as well as the home improvement stocks. Katie, Hurricane Idalia making landfall here in the U.S. as a Category 3 storm, knocking out power to hundreds of thousands of customers, grounding more than 800 airline flights, and unleashing floods along Florida's coast. Now, while Idalia did hit a sparsely populated area, it's the first direct hit for that part of Florida since modern record-keeping began back in 1851, and could still bring $10 billion in damages as it moves across northern Florida into Georgia and South Carolina in the coming days. We should point out that there is some good news here, is that the wind speeds have dropped down roughly about 80 miles per hour as of 1 p.m. Eastern time. And while investors assess the economic conditions, at least on a temporary basis in Florida, they're getting a broader picture of the economic story across the U.S. in total. A batch of economic data showing, well, better than feared retail inventory levels, better than expected filings for mortgage applications, better than expected numbers for pending home sales. But the data point everyone is focused on right now is that private payrolls released by the ADP Institute. 177,000 jobs in August. That's the smallest reading in 5 months as excess labor demand continues to dissipate. It's a mix the Fed, of course, has been wanting to see. Slower job growth and a low unemployment rate. The folks over at Bloomberg Economics looking at the fresh data and saying they now expect the Fed to take a more cautious approach on policy rates, which in their words means a prolonged pause of rate hikes, which will leave the Fed funds rate at its current range of 5.25 to 5.5. If they're right, Katie, that means Treasury rates might also be peaking here, but at least one strategist, Emmanuel Cohen, and his team over at Barclays, saying that might not bode well for stocks, particularly when you take into account the potential for a liquidity squeeze and maybe pressure on the consumer.
Well, let's focus on at least one measure of liquidity in the world's biggest bond market here. We have an index at Bloomberg that represents that. When the number goes up, that's bad news. And as you can see, that number absolutely soared back in March of 2020 and really has been deteriorating since the Fed kicked off that tightening cycle back last March. It's come in a little bit, but if you train your eyes, you can see the liquidity once again is starting to deteriorate in the Treasury market. But even still, the past few days, the past week or so has been great
for stock bulls. After a really ugly August, we are starting to see a favorable finish to the month, and the S&P 500 actually it's popped back above its 50-day moving average. Of course, it had been trading below that, but things started to change around mid-August. Now, of course, we know that these are the dog days of summers. There hasn't been much in the way of trading volume, so whether we can stay above these levels when we get into September remains to be seen.
All right, definitely. So S&P back above that 50-day moving average, as you pointed out. Volume relatively light here on the day, and an S&P right now at 45.11. Linda Dissel, Federated Hermes Senior Equity Strategist, joining us right now to kick us off to the close. And let's start with where the S&P is right now, right around a 4,500 level, a level it hasn't closed at since early August, Linda. And there's a lot of debate right now about the next direction, whether we go well above 4,500 or maybe we get a retest below that.
Yes, good afternoon, Romaine, and thanks for having me, and Katie as well. We are finishing this month, as you suggested, a bit better, but it's not been a good August, and still we're up 19% year to date, and I think we're within 2% of the high that we saw in the month of July. So we really haven't corrected that much. It's not been that painful at all. And historically, when you're up that high, going all the way back to 1950, it bodes okay for the month of September, and probably pretty good for the rest of the year. So we really think that you're going to probably finish the year much higher now.
I am curious about the correlation between equities right now and what we're seeing in the Treasury space and the direction of yields. If you go by the assumption that maybe we have reached a peak, at least in what the Fed is going to do here, does that bode well for stocks?
It bodes very well for stocks. Stocks worry about a recession, and they worry about inflation. And we've all pretty much come to the understanding that there's not going to be recession. I think I've said many times, and even on your program, people have underestimated all along the strength of the consumer, and the consumer is doing pretty well. So a recession's off the table for a while. Inflation seems to be coming down. We're not where we want to be, and the Fed has said so, but we're definitely coming down. In recent weeks here, I'd say this information this week has been inflation friendly. It's all good for stocks.
And Linda, it's interesting to hear you say that a recession is off the table, but at the same time, it doesn't sound like you're just blanket buying risk assets right now. I mean, high quality dividend areas, not exactly what I think when I think growth or risk asset appetite really back on in a big way.
Yeah, it's very interesting, too, when you bring that up. And, we try to say to our clients, okay, this is how we feel about where the economy is going, but where are the true values right now? And many parts of the market have been really picked over. There's nothing really that's super clear. So if I look back over 30 years, and I say if I go back 30 years, what sectors in the market are historically inexpensive? And they are these high-quality dividend sectors, which even as the 10-year Treasury bond yield has come down here recently, they're still not participating. People still do not find interest over there, and so even if it's not timely, that could very well be a good buying opportunity, that whole area.
Well, what's the catalyst there? If we have seen rates come down, if these names have been undervalued for quite a long time, what brings about that participation?
Well, I think that the AI fascination this year has made people more bullish on growth and growth stocks in general, and our economy has been growing well also. When we see interest rates coming down a bit and inflation coming down a bit, and we say, I realize we're at 5.5, which at Federated Hermes, that is our figure for this year end. They're probably going to stop. And we've said all along, it's not about how high they go, because they probably wouldn't go much higher than this. It's about how long they stay up there. And they can stay up there if the economy is doing well, and as long as they're up there, you get paid for cash. Why do you need to be investing, would be somebody's thinking. Why do I need to be investing in these defensive stocks when the economy is doing well? That's the theory anyway.
It certainly is, and I think every time we get these numbers, Linda, we know we always obsess over them. Oh my gosh, we came in slightly below economists' expectations, but 2% GDP growth rate in any other era would be considered relatively sustainable and good. There is still some concern as to what we haven't seen. We've seen what happened in the second quarter. We've got some sense of maybe how July started off, but it's going to be a while before we really start to get a clear picture as to whether the consumer held up through this summer, and more importantly, whether they're going to hold up deeper into the year when most of the spending, at least the retail spending, occurs.
That's right. And as we know, the recent retail sales numbers did surprise to the upside. Back to school looks pretty good, and that historically has some strong correlation with year-end sales. What is going to keep the consumer spending? The consumer still has a decent amount of excess cash over and above where he was in 2019, which was good, and his job is not in general being threatened. I realize the JOLTS numbers have come in. The job openings are down, and they're coming down. That's exactly what the Fed wanted, but there are 1.5 job openings today for every unemployed person, and you don't get back to pre-pandemic levels until you're down to just 1.2 job openings. It's still a tight labor market. Coming in the right direction, still tight. If I'm not worried about losing my job and my friends are not losing their jobs, and you know what, I'm going shopping.
And of course, we're going to get another piece of important labor market data on Friday, 8:30 a.m. Eastern. But Linda, just to tie a bow on this conversation, like you said, you're expecting to see stocks continue to do well through the end of the year. What could go wrong? What is the biggest risk that you would say that you're worried about?
Well, you know, the rest of the world is slowing and is below that 50 line of demarcation for whether you are a growing or slowing economy. Our economy has held up extremely well. I think it has a lot to do with the excess money, all that extra stimulus money that we have in the U.S. that the rest of the world doesn't have. We continue to buy that down, and we know that. So we don't want to be the only country that's growing. If we see, for example, capital expenditures doing well, but that has very, very much to do with spending on batteries and the like, with the stimulus monies that went directly towards those type of investments. When you strip that away, it's not as strong. So not as strong, and you'll see more and more companies saying, you know what, you're coming into the office 4 days a week. You're coming into the office 5 days a week. We have to do a layoff situation. That they say that unemployment goes up and comes down slowly until it comes down fast. That's what is to worry about. The excesses are slowly going away, and we have that high interest rate still.
Yeah.
And the lag. Remember the lag that it takes to feed into the economy. So it's still higher for longer.
All right, Linda, going to have to leave it there. Always a great conversation with Linda Dissel, Senior Equity Strategist over at Federated Hermes, helping us kick you off to the closing bell here on this Wednesday afternoon. Coming up after the break, a conversation with the CEO of Hewlett-Packard Enterprise, Antonio Neri, going to get his take on the company's full-year profit outlook, and while investors seem to be pleased with the results so far.
Plus, we'll take a closer look at how concerns about growth in China could affect the outlook for companies such as Nike.
And an eye on Hurricane Idalia and the latest on the damage caused by that storm, slamming into Florida and now working its way north across Georgia.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. Business Week Radio. Live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Season is here.
Decent start to earnings season.
We are heading into the meat of earnings season.
Bloomberg breaks the numbers first.
We have Bank America, we have Charles Schwab.
Tesla, Netflix, you name it. They're heading in the right direction.
A record quarter of revenue.
With exclusive expert analysis.
What do they have to deliver to justify the rally we have seen?
Earnings are still going to be under pressure.
Is there a divergence that's really important to draw here?
The massive divide between Diamond and Fraser.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
A look at Hewlett-Packard Enterprise boosting its annual profit outlook. The company saying it's confident that businesses are upgrading technology despite some concerns about the economy. The CEO of Hewlett-Packard Enterprise joining us right now, Antonio Neri, right on the heels of his earnings report here, where we saw fiscal third quarter revenue coming in line with estimates here. And of course, a focus on 3 of your units here, 2 units which saw relative softness, and 1 unit in particular, that Intelligent Edge business, that showed a 50% jump in revenue. And that has become what a lot of investors, Antonio, have started to focus on.
Well, good afternoon, Romain. Thanks for having me again. We are very pleased with the results of our third quarter, which was, again, very solid. We saw continued revenue growth and margin expansion once again. And that's driven by the intentional shift in our strategy to focus on high growth, high gross margin areas. And you talked about that Intelligent Edge, which had a stellar performance with 53% year-over-year revenue growth and an operating margin improvement of more than 1,300 basis points. And when we think about the composition of the company today, the Intelligent Edge now represent 20% of the total company revenue. 2 years ago was 10%, and now almost 50% of the company profit. So overall, an astonishing set of results. And that allows us to continue to invest in the business as we think about the next wave of growth, which obviously is going to be AI and hybrid cloud.
I am curious as to how that works out down the road, Antonio. When you were elevated to CEO about 5 years or so ago, you made a very clear point to investors that you wanted to diversify the company. At least on paper, it appears that you have already done that. But now the question becomes, has the pendulum swung too far? Are you going to be too dependent on that intelligent cloud business relative to some of the other business units?
Well, thank you for referring to that, because when I became CEO, I said that the enterprise of the future will be edge-centric, cloud-enabled, and data-driven. The edge was the next frontier, and we invested quite significant in that business, and we have more than doubled that business in 5 years. And that's the result of all the hard work. In 2019, I said we're going to deliver everything we do in the company as a service. And you see HP GreenLake. HP GreenLake now represents a significant part of our deferred revenue, which is all ratable, and including the profit. And in this quarter, we crossed the $12 billion total cumulative contract value, and we grew that $1.5 billion quarter over quarter. And that resulted in a 48% ARR increase. And so those are 2 examples are a great testament of when we focus and we execute, we deliver value for shareholders. Now, the third part of this is AI. But I'm very pleased about the edge, because now we create a new baseline. That baseline is being fueled also with new capabilities, expansion of TAM into the areas of security, software-defined wide area network, and core 5G and private 5G, who has yet to play into our numbers. So as we think about 24 and beyond, you will see the growth from those areas fueling the go momentum we have in the edge.
I want to talk a little bit more, though, about the compute and the storage units, because if you look at sales in the compute unit, that includes data centers and servers, of course, it declined 13%. That's slightly worse than what analysts had been estimating. What does that say about the appetite for corporate spend in this environment? When do you expect that cycle to maybe stabilize a bit?
Sure, Katie. I mean, we have that sixth magnificent quarter, I call it, revenue growth and significant operating margins way above the industry average. And now we're seeing the normalization of what I call the ongoing compute cyclicality that happens every few years. And so customers obviously pull in a lot of the orders last year because of the supply chain challenges. Those have now returned to normalized levels. And so now we see that digestion. But as I think about 24, we see a couple of three things coming in our favor. Number one is that we have a generational shift to new products. That's what we call Gen 11. Number two, we're going to see in 24 increase in commodity cost. That's natural evolution of the industry as demand improves. And number three, you're going to see more content towards AI, particularly what I call AI inference solutions, which is going to drive an increase in the percentage of the mix. And so over time, we're going to see that. But let me be clear, this quarter, we saw demand improving on the unit level on a quarter-over-quarter basis. And when you add the HPC and AI compute as well, on an aggregate, the server category actually grew on the unit very nicely, which drove a double-digit growth in our attach related to operational services, which obviously is the most profitable part of the business.
And Antonio, we only have about 45 seconds left with you, but I do want to talk about the C-suite a little bit. Of course, earlier this month, you announced that your CFO would depart. Where are you on the search for a replacement? Do you have any sense of timing there?
Sure. I mean, my goal is in the next 60, no more than 90 days to have a new CFO. I want to say I'm very proud that Tarek had the opportunity to become a CEO of a public company. Tarek and I have done some unique things to position the company into the future. I'm very proud that the work has done. But for me, it's important that we focus on the next profile, which is continue to execute the strategy and continue to drive the financial architectures that you just saw in our numbers. So we will take our time. We want to find, obviously, a great CFO. But obviously, there is a process which looks both internally and externally. We have a fantastic finance team in this company.
Well, Antonio, it's great to get some time with you today. Really appreciate it. That is Antonio Neri, of course, the Hewlett-Packard Enterprise CEO. Now, coming up on the close, what is it about tech bros and utopias? We'll discuss big plans from VC billionaires like Mike Moritz and Reid Hoffman to build a new city outside of San Francisco. This is Bloomberg.
And money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
All right, rethinking things is what venture capitalists are supposed to do, but it's not always easy to do that within, well, the structure of existing cities and the bureaucracy around it. Mark Andreessen, Reid Hoffman, Mike Moritz, and other Silicon Valley billionaires have made big plans, apparently, for a rural area that's about 60 miles just northeast of San Francisco that, well, they think they could turn into a bit of a utopia. Sarah McBride for joining us right now from our San Francisco bureau to talk a little bit more about this. And Sarah, you had a great write-up on the Bloomberg terminal about this. There's been all the talk here about what these guys, and they're all guys, trying to do right now. But you also made the point that quite a few other folks have also tried to do something similar.
Sure. Just for the record, Laureen Powell-Jobs is one of the people involved. So not all guys, but yeah, there have been, no, it's okay. There have been many, many similar efforts. There's this undeniable fascination between people who are successful in tech and the idea of remaking cities. So just to refresh your memory, Mark Lohr, the founder of Vapors.com, and some others tried to build a big city. He even hired a celebrity architect, BIG, and they built up plans that never really panned out. There was a cryptocurrency millionaire who made an effort in Nevada. He wanted to implement a new form of government, and the local county commissioners voted it down. We never heard more about that.
Yeah.
There have been many efforts, and the latest is NEO. That's not a tech bro effort. That's a government effort in Saudi Arabia, but it has every imaginable tech gizmo built into it. So people keep trying with mixed success.
I love that this is a cross-border thing. It's not just a U.S. phenomenon of these tech pros trying to build a fantasy city. Have any of these efforts planned out? Do we have any blueprint for how this current effort might go?
Well, there are a few efforts that have worked, but those, when you think small scale, they can work. Like there are definitely planned communities. The guy who founded The Limited built one in Ohio, but it's more kind of a little neighborhood than a huge city. When it comes to huge cities, it can work, but really only when governments get involved. So if you think about a city like Shenzhen in China, that was heavy government involvement. Milton Keynes in Britain is another one where the government just decided to create an ideal city. If this works, it'll be much more advanced than any of those because they can build in things like sensors for self-driving cars and all kinds of amenities.
What's the reality? I mean, we should, in fairness to these folks, and I know they've been kind of the subject of a lot of ridicule. I mean, this is kind of as old as humanity itself. I was going down this rabbit hole, and I found examples from the 1800s, and then famously Frank Lloyd Wright tried to build his own community. Right. So this is something that happens over and over. Is there a sense of scale that determines whether this succeeds or fails? Because to do this in a small, kind of suburbanish community, maybe that works, but to do it with, I don't know, several hundred acres, does that work?
I mean, they're looking at a huge chunk of Solano County. So if it works, it'll be the largest private attempt to do something like this. Unfortunately, the land they've chosen has so many problems. It's near all these sensitive wetlands. It's considered a fire risk. It's very windy. They have really no transportation ties to much of the area. So they've taken on what's already a big challenge, and it's even more challenging than the average area that's been tried. So, I mean, to be generous, maybe a 50-50 chance.
Yeah, there was some great reporting by one of our competitors kind of talking about why they were able to snap up some of this land at the prices they did because, well, the people selling it realized that there wasn't a whole lot there that could be developed. Maybe they'll prove them wrong. Sarah, a great story here on the Bloomberg Terminal. I urge everyone to check it out. Sarah McBride in our San Francisco bureau, and a look at some of the, let's just say, rich tech folks here who want to create their own utopia. Meanwhile, back here on Earth, a look at the broader market, up a fraction of a percent. This is Bloomberg.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. It is then the market forces and the business incentives of global companies that transform that EU rule.
On the next episode of The Circuit.
And I've heard you say you were really motivated by the fact that a lot of people didn't think you could do this.
I think even today I'm underestimated. And I think even today Bumble is underestimated in terms of what we can be and what we can do in the world.
Watch The Circuit now on Fire TV channels.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Welcome back to Bloomberg Markets. The close and eye right now on Hurricane Idalia, which is spreading damaging winds and heavy rains inland. It made landfall earlier on Florida's west coast as a Category 3 storm. In fact, with maximum sustained winds of 125 miles per hour, the area where it made landfall, the first time you've had a hurricane of that category making landfall in that area since the 1850s. On the ground in Tampa, Florida right now is ABC News reporter Em Nguyen, who has been tracking this storm for us. And Em, let's start off with what we know about the storm right now. 125 miles per hour. When it made landfall, I'm told that those winds have died down to some degree.
Those winds have definitely died down to some degree, Romaine, certainly as it was heading towards the coast as a Category 4. It landed as a Category 3, and now it's down to a Category 1, which means those winds have definitely come down. And actually here in Tampa, we didn't see rain for about a couple of hours. It actually just started to pick up again, and we're actually looking out for a tornado watch in this area, as well as a storm surge warning and a tropical storm warning now.
And Em, of course, on Idalia's path, now that it's moved northwards towards Georgia, what kind of impact should we be expecting there?
So those outer banks of the actual hurricane, that's going to bring a lot of calamity into certain areas, especially as we had seen here through the coastal areas of Florida. Now that it's heading northward, northeastward in Georgia and the Carolinas, I'm sure they're going to start to see that heavy rain and wind that we had seen overnight. Certainly, we have heard from local officials such as the Tampa Police Department. They have actually seen stranded cars in high waters. They are warning residents here to be sure not to go outside during this time. If you see any standing water that you can't see the bottom of, don't try to go into that area, even if you are in a car. We've also heard from the Tampa International Airport. They had been assessing the airport area for quite some time now. They said their officials were working around the clock. There was actually flooding there, and that's about 7 minutes from where I am right now. But we have officially heard that they are reopening the airport as of 4 p.m. this afternoon. And certainly we also have heard from other state officials who say they are looking around at the debris. They're looking around and assessing what is happening across the state. You know, they've seen some split trees, downed fences, and certainly they're just warning everyone to stay inside right now because you just don't know how dangerous it is until the storm has completely passed.
All right, ABC News reporter Em Nguyen on the ground in Tampa, Florida, tracking a Hurricane Idalia, which is now making its way up the northern part of the U.S. East Coast down there in the South, Georgia, South Carolina. Winds now at Category 1 levels, but a lot of concerns as to putting a price tag on the potential damage. The folks over at Citi have said that while this is a material event, the losses could be relatively contained. But there's a broader question here about how you price in, well, the longer-term risk from these types of disasters. HSBC's S&P's global head of ESG research is sounding the alarm, saying investors just aren't paying enough attention to these risks lurking in their portfolio, telling Bloomberg that, quote, "We believe the externalities of sustainability issues aren't well priced or accurately priced at the moment, given the potential damage to both society, economies, and the environment that can be done if these sustainability issues are left unaddressed." Margarita Perovska is the Director of Policy over at the United Nations-backed Principles for Responsible Investment. She joins us right now to talk a little bit more about this. And Margarita, this has been a topic of conversation, quite frankly, for years now, as to how insurers and policymakers and other businesses sort of account for the potential for things like climate change and other sort of environmental issues that maybe don't really have a model right now that you can rely on.
No, you're right. This is unprecedented. And only for the past couple of years, governments and regulators have been focusing on this topic of the economic transition. That is, how to reorient economic growth towards the goals of the Paris Agreement, to addressing the urgent issue of climate change. So this transition matters. We know that the risks of maintaining business as usual are huge. Not just for the planet, but for economic and social stability and resilience. And we know that economic growth and financial returns rely on the stability of those systems. So if they are under threat, so is future economic growth.
I'm curious, though, that how do you move society along? Because we know that this isn't just a decision that one person in power can make, at least in democratic governments. You need the support of the people. And as I'm sure you know, at least here in the U.S., not everybody even believes that climate change exists. So what does the government do to actually sort of further its cause of protecting our coast, protecting our nation overall, when you have a huge populace that doesn't really want to go along with it?
It's a very complex strategy indeed. So this involves governments adopting transition-related frameworks. This involves investors investing responsibly, incorporating those ESG risks and opportunities. This also involves a broader societal change. But on the side of policy, what really matters is that the economic transition, the goals of the Paris Agreement and broader sustainability goals are embedded throughout economic and public policy, throughout financial regulations. And what we're not seeing this yet. There are different approaches in different markets, and they all tackle relevant aspects of the economic transition, addressing externalities, incentivizing markets, or actually hardwiring sustainability financial regulations. But what we need is a whole of government approach where this is positioned as a central goal for public policy, that this is integrated in the mandate of different agencies and departments, and that this is budgeted.
And Margarita, let's talk about the different markets here. When you take a global look here and you think about the policies in the U.S., how does that compare to other parts of the globe, to Europe, for example?
Yeah, so the Inflation Reduction Act is a very good example of, well, what we used to have in the past as industrial policy, but now it's a broader series of measures aiming to incentivize the economic growth that we need in order to address those fundamental risks, such as climate change. In Europe, the equivalent is the EU Green Deal, which also aims to incentivize renewable energy, energy efficiency, and so on. So this is very important, but we also need to address that decade-long economic conundrum of externalities, and that includes carbon pricing, and carbon pricing at the behavior-changing level. So that's a very important policy piece that governments need to consider. And lastly, let's not forget the enabling financial regulations, which include clarifying that investors can support and invest for the transition because this is instrumental for them in achieving financial returns, enabling disclosures by corporates on key ESG risks, not just climate, formalizing stewardship, and so on.
Margarita, it's really great to get your perspective. Thank you for your time. That is Margarita Perovska. She is Director of Policy over at Principles for Responsible Investment. Still ahead, macro headwinds in China, the strong U.S. dollar, and reduced guidance at Foot Locker and Dick's Sporting Goods are just some of the reasons why Stifel has cut Nike's price target. We'll talk to the analysts behind the call next. This is Bloomberg.
names in business are on Bloomberg.
We're seeing a resilient consumer out there. We're also seeing consumers premiumize, and what we mean by that is consumer habits are changing. People want to drink better, not more, but higher quality spirits. And so, look, it's been a bit of a balance this year, battling inflation. At the end of the day, we see volumes growing back over time.
Nobody covers business like Bloomberg, your global business authority.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think of myself as a realist, trying to see the world as it really is and not the way I'd like it to be. And sometimes I succeed and sometimes I fail in that.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point, what is the lesson or the observation?
All right, let's get a view from the sell side with our top calls, the big movers on the back of analyst recommendations, and start with Amarella here. TD Cowen downgrading to market perform from outperform. This after the chip designer provided investors with a disappointing revenue forecast. The downgrade reflecting poor visibility in the near term as excess inventory burn accelerates, and longer term concern right now that the company's investments in AI-related large language models are unlikely to generate meaningful revenue until 2025 at the earliest, shares having their worst day in a year. Next up, Box, rating cut to hold over at Craig-Hallum. Growth at the cloud management provider slowing as customers pull back on seat-based pricing plans for cloud services. You couple that with Box's in-line second quarter sales report, and that's the reason the analyst says they had to downgrade. Shares having an awful day, 11% lower. And finally, Peloton getting cut to neutral over at Macquarie, with the analyst there saying that volatility is now the norm for the stock, the interactive equipment maker, as it struggles to balance post-recall related costs, elevated subscriber pausing, and free cash flow weakness. Shares, nevertheless, though, bucking the trend, up about 1.5% on the day. And those are some of our top calls. We want to stay in the fitness space right now and take a closer look at Nike. Shares up for a fourth straight day here, but Stifel says it's taken a more conservative view. Disappointment over Nike's long-term growth outlook for sales in the greater China region, leading the firm to cut its price target to $135, down from $143, but also revising, lower its overall forecast for revenue growth out of that region. Jim Duffy joins us right now for more. He's the managing director for equity research there and still has a buy rating on Nike shares. And Jim, let's start off with what's going on in China, because for a while, this seemed like this was going to become the growth story for Nike. Then the pandemic hit, and there are a lot of other political issues that maybe sort of caused some folks in China to move to other brands. When you look at Nike's market share right now in the China region, is this about as good as it's going to get?
No, we actually think Nike still has room to grow share. As you mentioned, we are still recommending Nike stock, but have taken a more conservative view on the growth outlook, just given the macro backdrop. The Chinese economy is still growing, albeit at a more muted rate than had been expected, and Chinese consumers are behaving conservatively. We've taken our constant currency growth estimate in Greater China for Nike from 19% down to 10%.
This may be a dumb question, Jim, but how much does Nike need China? I mean, even when we see the weakness there in recent quarters here, it seems like some of that has been made up in sales in other areas, primarily in its home area in North America.
Yeah, Nike has a $7.5 billion business in China. It's about 14% of the global mix, but a more meaningful portion of the planned growth. In Nike's multi-year growth algorithm, China was expected to be responsible for about 30% of the incremental dollars. Now, North America has over-delivered relative to expectations. Western Europe has over-delivered on a constant currency basis relative to expectations. But China remains a very important component of Nike's growth engine.
Well, Jim, here's another question along the same lines. How much does Nike need Foot Locker?
Yeah, good question and very topical. I'm glad you brought that up. Nike shares have underperformed in the last week around the Foot Locker news, around the Dick's Sporting Goods news. We think that the news related to Foot Locker is overblown.
Hey, Jim, I'm going to have to interrupt you. My apologies here. Jim Duffy over at CFO. We need to go to the President of the United States addressing the public on the government response to Hurricane Idalia.
This morning as a Category 3 hurricane. And it's moved over land and is now shifted to Category 1, but it is still very dangerous with winds up to 75 miles an hour. And the impacts of this storm are being felt throughout the southeast, even as it moves up the eastern coast of the United States, affecting Georgia, South Carolina, and North Carolina. And we have to remain vigilant, and there's much more to do. I just came from the Oval Office where I met with the FEMA administrator, who's standing to my left here, and our federal response folks. And early Monday morning, long before the storm made landfall, I spoke with Governor DeSantis and approved an early request for emergency declaration to enable him to have the full support ahead of time to protect the people's lives in the state of Florida. We surged personnel to Florida to help the state move people quickly to safety and out of a danger zone, and to help the governor and his team to the greatest degree possible in advance of the hurricane's arrival. And I directed the FEMA to redeploy resources, including up to 1,500 personnel and 900 Coast Guard personnel throughout the Southeast. I directed Administrator Criswell to stay in close touch with the governor. She was with me when I was speaking to him as well. And I guess he's maybe tired of hearing both of us, but he seemed like he welcomed it. As a matter of fact, I've asked that she get on the plane and leave for Florida this afternoon. She'll meet with Governor DeSantis tomorrow and begin helping conducting the federal assessment at my direction. Federal teams on the ground are going to continue to work with the first responders in Florida, Georgia, South Carolina, North Carolina to get people to safety. You've all been reporting this. You've seen it on television. There are a number of rescues already taking place as I walked out of my office a moment ago to begin to recover from the impacts of this storm. I let each governor I spoke with know if there's anything the states need right now, I'm ready to mobilize that support of what they need. I don't think anybody can deny the impact of the climate crisis anymore. Just look around. Historic floods, more intense droughts, extreme heat, significant wildfires have caused significant damage like we've never seen before, not only throughout the Hawaiian Islands in the United States, but in Canada and other parts of the world. We've never seen this much fire. And while we're dealing with this latest extreme weather event, I remain laser focused on recovering and rebuilding efforts in Maui. We were out there, and many of you were there as well. It's devastating what happened there. When I took office, I directed my team to raise our game in how we lead and coordinate our responses to natural disasters. And because I've been around a while and I've known how these function, to ensure we met people where they are, when they need our help the most. Because of the devastation of wildfires from California, New Mexico, Oregon, Washington State, Idaho, Louisiana, we've learned a heck of a lot. A lot of damage in the meantime, but we've learned a heck of a lot. And we're putting the lessons we've learned to work. In a few moments, I'm going to be with my entire cabinet in the next room over, who are leading the federal recovery and rebuilding efforts, and report on their progress, providing urgently needed support to the people of Maui. If I can note, for just parenthetically for just a moment, you know, when you have your home washed away, when you are a fire that's taken your home away, when your school has been destroyed and there's no way you can't send your kid to school, these are urgent needs. And no matter how bright, how informed, how wealthy, how poor they are, you just need reassurance. So how in God's name are I going to get through this? Well, Jill and I saw the devastation in Maui firsthand. And I want to thank Governor Josh Green, who's doing one hell of a job. Along with their congressional delegation, there's total unity out there. And for everything they're doing to support the recovery effort. I directed my team to do everything we can for as long as it takes to help Maui recover, rebuild in a way that respects and honors Hawaiian traditions and cultures and the needs of the local community. We're not going to turn this into a new land grab. We're not trying to see multi-million-dollar homes on the beach. We want to restore that part of the island like it was before, only better. To that end, when I was on the island last week, I appointed Bob Fenton, one of the nation's leading emergency managers, and I mean that's not hyperbole, who's been on the ground in Hawaii since before the fires erupted as our chief federal response coordinator to lead our long-term recovery on Maui. I've charged him with making sure the community has everything the federal government can offer to heal and build back better as fast as possible. You know, he'll be giving me a report virtually on Maui when I walk out of this room and go to the cabinet room of our meeting in just a few minutes. And as an example of our commitment, we're not only building back, but we're going to build back stronger and more resilient future, which means we need to be ready to withstand any challenge coming our way in rebuilding the way that Maui wants to rebuild, the nature of the rebuilding. Today, I'm announcing that $95 million from the bipartisan infrastructure law is on the way to Hawaii to harden the ground power, harden the grid we talk about. I know when we start talking about the grid, the average American out there thinks, what are we talking about? Well, the ability to transmit electricity. Well, let me tell you what it means. It means investments to make sure electricity can continue to reach homes, hospitals, water stations, even during intense storms and extreme weather. Funding will be used for stronger and better poles holding up the wires that transmit the electricity. It'll mean stronger material. It'll mean burying these lines that transmit the electricity underground. It's more expensive to do that, but where possible, we should put them underground. They're safest. It means clearing trees and brush around these wires. It's like the kindling is that exists out there. That's what it ends up being when one of those wires come down. And this funding is going to pay for installing technology like smart meters that can tell you where the problem actually is when the line goes down. That's part of the problem. A lot of these, in other, not Hawaii's, Maui's not that big, but in parts of California, Oregon, and all these places where these fires were, where did the wire go down? We're going to be installing meters to let the person sitting back in the headquarters know, whoa, it went down at such and such a coordinates, such and such a pole. To enable emergency responders to more quickly identify which lines are damaged or down. So
the President of the United States speaking there from the White House about two disasters, of course, the wildfires that occurred in Maui and the federal response to that, and of course now Hurricane Idalia, which made landfall over the last 24 hours down in Florida, and the potential federal response that will be needed to help make those folks down there whole. You can continue to listen in to the President's comments on the Bloomberg terminal, but we come back to the studio where Kelly Lyons, a co-host of Bloomberg's Balance of Power, is here in our New York studios to talk a little bit more here about the president's efforts and, more importantly, some of the criticism, Kelly, that he's received about the slowness to respond to some of these major events.
Yeah, Maui in particular, Romaine, which he was just speaking to, it was the weekend after that fire raged through Lahaina, where he was on vacation. in Delaware and was asked about it by reporters and said no comment. He caught a lot of flack for not having a comment, considering this is supposed to be the consoler-in-chief, and this is a president who has been praised for his empathy. It took several days for the White House to kind of correct the response to that, and then ultimately last week he was on the ground there in Maui to visit the disaster firsthand. That is what he's speaking of now, and of course seeing another disaster taking place in Florida, and he is working on the federal level with governors of those states for the ongoing response. What is interesting here at the federal level, though, is that these disasters do highlight another challenge for this administration, which is getting more funding for disaster relief. They have asked in a supplemental funding package that they've asked Congress for $40 billion in total, $12 billion of that for emergency aid, and yet it's attached to Ukraine funding. That makes it politically difficult to get through, especially the House of Representatives, but disasters like this may really highlight the need to shore up the funding for FEMA.
All right, Kaylee, I do want to ask you, of course, as the co-host of Balance of Power, someone who covers what's going on in Washington very closely. There was an incident that we learned about just a little while ago where the Senate Republican leader, Mitch McConnell, appeared to freeze while taking questions from reporters. This was in an event in Kentucky. Now, he is 81 years old, and we should point out it was just a few weeks ago where he appeared to have a similar incident. What do we know?
Well, we know that he was there in Kentucky. He was asked specifically about his thoughts on running for re-election in 2026, which of course is when his current 6-year term expires. He didn't answer the question. He abruptly stopped talking, and then for more than 30 seconds, he did not speak. Now, he did later re-engage with the Q&A session in reporters, and a spokesperson actually told Punchbowl that McConnell felt momentarily lightheaded and paused, adding, while he feels fine, as a prudential measure, the leader will be consulting a physician prior to his next event. But as you say, Romaine, this is not the first time. Just this summer, we have seen this happen. It happened in July in a news conference on Capitol Hill. He had froze for more than 20 seconds, later did return to the news conference, say he was fine, and his office later issued via a spokesperson a statement saying that he does intend to see out his term as leader. Even the number 2 Republican in the Senate, Senator John Thune, expressed support for McConnell to finish out his term should he so choose. But it just does raise questions given this is an 81-year-old leader of the Republicans in the Senate, Romaine.
Yeah, Kaylee, and we should point out, too, of course, we've seen similar concerns being raised about Dianne Feinstein, who's approaching 90 years old, and the average age right now of a U.S. Senator topping out at around 65 years of age. Kaylee Lyons, who co-hosts Bloomberg's Balance of Power right here on this network. You can catch her every day at 5 p.m. Washington time. Meanwhile, back here in U.S. markets, as we round out the first hour of this show and head into the final hour of trading, Katie Greifeld. Green across the screen here is modest gains, but the gains holding, to be sure.
And this is a cross-market story as well. You can see that in the Treasury market. A little bit of buying. It still is a pretty muted day overall. You look at volumes right now, they're down across the board. We'll see how that changes on Friday when we actually do get that big jobs report that we've been talking about all week.
Yeah, and you always have to take price action at this time of year with
We'll see how that changes on Friday when we actually do get that big jobs report that we've been talking about all week.
Yeah, and you always have to take price action at this time of year with a grain of salt. Seasonality, meaning that most people are still on vacation or not quite back at their desk in full that they would be. That's obviously going to change after the Labor Day holiday, which is this Monday here in the United States, and presumably everyone will have to be back in their seats on Tuesday.
Presumably. We'll see what happens. August is also a great time to talk about technicals, I've found. Technicals, seasonality, those are the types of things that we talk about around this time.
Well, there's a lot we're
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And very good afternoon, everybody. Live in our Bloomberg Interactive Brokers studio, streaming on YouTube and, of course, on Bloomberg Originals. It is Wednesday. What?
We're halfway there, Carol.
To what?
To a 3-day weekend.
Actually, mine's more like a 2-week weekend.
2-week weekend, I know. I wasn't going to say that in case you wanted it to be a surprise for everyone next week.
Surprise everybody. No.
You deserve it.
Thank you. We all deserve a break every once in a while. Happy Wednesday, everybody. August 30th. We're almost done with the month of August. And we have had another interesting dump of data. And you've got the S&P headed for a fourth day of gains. S&P 500 topping 4,500. If you're interested in some of those round numbers, key technical levels, and yields, Tim, backing off again.
Carol.
Tim.
Is the Fed finished?
I don't know.
I like driving you completely nuts with my questions about the
Every time
Fed.
he brings up the Fed in like our simulcast, I'm like, I look at him, I'm like, and he's like, see what I did?
I'm not a
like,
proponent of violence, but I can tell you want to punch me in the face whenever I do that.
No, I don't like to hit anybody. Fed's going to do what it's going to do, and you know when I'm going to really know? On September 20th.
You know, we're all just living in Jay Powell's world. How's that?
Exactly, Jay Powell, and yeah, he's going to do what he's going to do, and we got a lot of data points still to get to until we ultimately know. All right. Anyway, with that in mind, our times, the all-important and sometimes conflicting economic reports, what it means for, I'm going to go there, Tim, monetary policy and rates, and then the all-important extreme weather of our time. We take the temps of both the economy and our climate future. This is what we talk about, and rightfully so every day.
Yeah, first hour of our program today, really spending a lot of time with those two topics. Also, not so long ago, investors could not get enough of the Tiger Cubs. Those are, of course, the hedge funds run by Julian Robertson's proteges.
Tiger Cubs.
Yeah, but you know what?
Not so cute?
Not so cute anymore. The flood of money, Carol, it's slowed to a trickle. Perhaps not surprising given the performance of these funds last year.
Past performance. Anyway.
Past performance is perhaps indicative of future fund flows.
Nicely done
Thank
there.
you. I might say that later today.
I think you should. All right. Plus, we're getting an overview of the upcoming Double Cities issue of Bloomberg Business Week. Love these issues. They take us to all corners of the world, what's going on. Everything from cheap office rehabs to recycled water and more city-saving ideas, and the small Mexican city that's thriving on dental work. Really looking forward to that.
And the president of 4Air on making air travel more sustainable.
Yeah, this is interesting. And, sorry, when you weren't here, but Matt Miller and I talked a lot about carbon credits versus just actually reducing your carbon footprint, which I am a proponent of.
Airplanes are dirty.
Okay. I could go a lot of places, but I'm not. Where I am going to go is the markets right now. We're heading over to our TV colleagues. Countdown to the close starts now.
Down to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Carol Masser and Tim Stenivek. Welcome to our audiences across all of our Bloomberg platforms.
Who is this?
Television, radio. You're breaking up here, Carol. Television, radio, originals, a few other things there. Carol won't let me get in all of our Bloomberg properties, which pays her salary. But nevertheless, check them all out here, Carol. Speaking of paying salaries, did you take a look at that jobs data this morning?
Yeah. I feel like another data dump, and you did see adding 177,000 jobs, smallest gain in 5 months. You also had some updates on GDP data and inflation data. Some of it showing, increasingly things are slowing down. That jobs
I was away
data,
for a little while. Was Carol here the whole time, Tim? Or did she
yeah, she was here the whole time. Yeah, okay. I had to go back and check my memory banks.
Someone's got to be a revenue generator.
Yeah, she was here.
I was also here.
You were here.
For what it's worth.
I was here. I'll be honest. I was here some days.
Oh.
I wasn't here all the days. Did you have a good vacation, Romaine?
I did.
Okay.
I did. It was wonderful.
No,
but I miss being away from you.
Were you here in the U.S.? Did you stimulate the U.S. economy?
I've stimulated the Canadian economy.
You're part of the problem, my friend.
Nice.
You are part of the problem, or maybe part of the solution.
We talked about you, like folks just traveling, another surge in traveling. So you were actually on our minds and in our story.
Well, in fairness, I did have to take a flight, from the U.S. there. So I guess I put some money into the pockets of United.
Anyway, the economic news today. Focus, everybody. Right, like maybe
we were talking the economy. to me, Carol. What do you want?
But increasingly,
Yeah.
you know, the big question, right? Is the Fed done, and are we seeing that as yields back off? Are we seeing that, right, Tim?
I mean, I think that is the big
We
message.
were having that conversation 2 weeks ago before I left. We're still having that?
I think we'll probably even have it later in September, Romaine, even after that meeting in September. We might have it.
But can we talk earnings? No, just kidding.
I do think that, you know, the taken together all the data do kind of give some more ammunition to the folks who think the Fed is going to take a pause or, you know, actually maybe even stop hiking.
Wow.
Well,
Did I
Tim
say
just
that?
jinxed it.
Wow.
But it's only a little bit of data, guys.
Only a little bit of data, and we'll see, of course, the relationship between ADP and NFP is a fraught one in the best of times. But I want to talk about one of the most read stories on the Bloomberg terminal. It's a great piece on the Tiger Cubs. Of course, we're talking about the proteges of Julian Robertson. For a while, it seems like they were just raking in the money, but we saw our Bloomberg News colleagues really crunch the numbers, go through the filings, and they found that in some cases, hedge fund inflows have dropped by nearly 100% at some of these alums, if you will, the Tiger Cubs. So it really speaks to the mood music at the moment, a sign of the times. It's been really difficult to raise money.
Doesn't it speak to actually their performance?
That too.
Yeah, and the thing is too, I mean, these Tiger Cubs, they got a lot of attention for obvious reasons, just given their pedigree, for lack of a better word, and where they came from. But we've seen this so much with these sort of hot managers, right? I mean, name one money manager, big money manager, who has had consistent outperformance over the entirety of their career. I mean, I don't think it exists. Maybe it exists somewhere.
Maybe Fidelity's Magellan Fund.
But that's not really active management, though.
Really?
I don't know.
I don't know.
Don't get me in trouble, Tim.
I won't. But I think that's the only, that's the only person I can think of. And he retired before he was 40?
Yeah. Well, maybe that's it. You just
Exactly. Maybe that's the secret.
Drop the mic and go out. And
I mean, do you consider, like, if you look at a Warren Buffett, right, over his years? I mean, obviously not apples to apples, but I mean, not all of his bets have even paid off, but we still look at him as a great investor. So I'm trying to figure out, like, how do you figure out, okay, maybe they're just having a couple bad years versus.
Well, but that doesn't matter. I mean, I don't think their legacy is tainted at all, right? I mean, they'll still go down. I mean, particularly when you consider some of the outsized returns they had when those funds first launched. But like I said, we've been here before. I mean, you name some of the big heavyweights, and they all go through these doldrums. Sometimes they bounce back. Sometimes they just fade away.
As long as you have money to invest, right?
Yeah.
As long as some money comes in. All right, guys. Welcome back, Romaine. It's good to have you back. We're going to be back. In fact, the four of us, we're going to count you down at the close on this Wednesday. Radio, TV, YouTube, and, of course, Bloomberg Originals. Join us at 4 p.m. Wall Street time for Beyond the Bell. From our chat with our TV colleagues, we've got a lot to talk about and a lot of economic data. We talked about the government's main measure of U.S. economic activity in the second quarter revised down, more moderate business investment than initially reported, outweighing stronger consumer spending. And then we also, Tim, we just talked about it, what we got on the labor front.
Yeah, that's right. So U.S. companies in August adding the fewest jobs in 5 months. That's according to ADP's private reporting. That adds to signs of moderating labor demand. Katie mentioned sort of the asterisk here, which is like, do we put all our faith in ADP?
No, exactly.
We don't. We wait for what happens on Friday. But taken together, Carol, it indicates one thing. It sort of adds fuel to the, fuel to the fire that people are saying, okay, well, the economy is indeed slowing. The long and variable lags are, well, they're hitting.
All right, so let's get to our economic duo that we've got. Great two individuals. Bloomberg Economics Chief U.S. Economist Anna Wong and Stuart Paul, U.S. Economist for Bloomberg Economics. Anna on Zoom in D.C. in our D.C. bureau and offices, and Stuart joining us in the Bloomberg Interactive Broker studio. Anna, we do want to start first with you, though. Break down the data points and what you think, because we're getting a lot, is really important when it comes to the Fed direction and U.S. monetary policy.
Yeah, I think there are a lot of mixed data out there, and for the Fed, the challenge would be to decipher the signal from the noise. So, for example, one of the noise that I think we are going to be getting soon would be that the third quarter GDP would be super robust. But I think the true signal is what's hidden in the GDP second quarter revision that we saw today, which is the average of GDI and GDP actually shows that the U.S. economy is growing below trend. And so
that's a key average that the Fed watches, correct?
Yes. And in fact, that's the key that even the NBER business cycle data will be focusing on, that traditionally the average of the two tells you more about the trend growth of the economy than just GDP alone. And not to mention that we do think it's the Barbenheimer and Taylor Swift and Beyonce contributed to the outsized GDP third quarter growth.
I believe Barbie did more than Oppenheimer. I'm just
what about Taylor Swift?
And Taylor.
Yeah, what about
Taylor
Taylor
Swift? It's the women. Anyway,
yes.
It's all of it.
It's everything, right?
Let's bring in Stuart, because Stu, how are you seeing some of the data that we got today and how you're thinking about what's going on in the U.S. economy and what matters to the Fed and monetary policy, and then that's ultimately going to matter to investors?
I think that Anna's exactly right. The downward revisions play a meaningful role in
Do you have to
Fed's
say
thinking.
that because you got to work for her?
Yes, absolutely. But I also do think that she's right. She's super smart and she leads our team and she's great. And I think that she is exactly right, that it does shape the Fed's thinking. And I think specifically when we're looking at specific line items, I think that the downward revision to fixed investment, particularly equipment, speaks to a slowing productive capacity of the United States. I think that we also then need to think about corporate profits when we're looking down the road. And corporate profits are sliding, albeit at a slower pace. So we get that in the second estimate today. We get that as part of GDI. And if we're thinking about CapEx going forward, we need to keep that in mind.
What about the strikes, though, Stuart? To what extent are strikes affecting these numbers, and are they going to affect numbers that we get for the month of August?
So they're going to obviously most directly affect our jobs report on Friday. Probably, so they don't affect really much in the 2Q GDP numbers.
What are the big strikes we're talking about? Writers Guild?
Writers Guild, Screen Actors Guild. There are strikes at the University of Michigan with graduate students, and WabTech, so an industrial company.
Okay. But these are having a material effect on the numbers.
The first jobs report for which it will have a very meaningful effect is coming out this Friday. And it's really the Screen Actors Guild that's the major swing factor between past months and this month.
But come on. I mean, Anna, don't we disregard that and say, okay, we know there's special factors, there's nuances to it. I mean, are we going to do that? And should we?
Well, I think strikes actually have very complex implications for the Fed. First, there's the impact when it happened. Well, it will be a dent on the payroll print. Then it also has to do with how does the strike end. So take the example of Teamster just from a couple of weeks ago. Well, the company, Yellow, bankrupt, went into bankruptcy after the strike, right? So it could be that those people who went on strike thought they got a deal actually will be laid off eventually. So I think it's just too early to tell a story of how the strike would affect how the Fed make policy, because suppose that the strikes were successful, and strikes have not been successful for over 40 years. They were last successful prior to 1980s, but after that, usually strikes ended up either those guys got paid, laid off, or didn't get the wage demands they want. And if they do get the wage demand they want, then the Fed would actually worry about wage price spiral and would actually hike even in the midst of strikes. So it's actually a very complex thing to consider for policy making.
Stuart, is there a bigger story here with the perceived power that we're seeing with American employees right now?
So we could think about the change in unionization over time.
Which looks nothing like the 1980s.
Which looks nothing like the 1980s. Yes, unionization has declined basically across the board. I think that when we're thinking about unionization in the context of a wage price spiral, for example, though, we need to keep in mind that an increased share of the economy is receiving transfer payments, which are indexed to inflation. So it's not entirely the case. So while there could still be this dynamic of a wage price spiral taking place in some smaller segment of the economy that's still unionized, you could still get real income growth in the context of real transfer payment growth taking place in another segment of the economy. So it's not as though we can entirely say the world is completely different. Yes, the drivers of this sort of dynamic that exists in the background might be different, but we can't fully write off upside inflation risks.
When you said drivers, I thought you were going to mention UPS drivers now making $170,000 a year.
Talk about threat of a strike that's worked. And if we think about threatening strikes, we have UAW coming up because their renegotiation is going to be taking place in September, which makes for a very tricky September payrolls report coming out right after the Fed meets for its Halloween meeting.
You know, it's interesting because there was someone too who was talking about her kid getting to school, and I guess there's strikes potentially for bus drivers here in New York City. I do feel like there's certainly a wave going on. You know, Anna, I am trying to understand what's going on in the economy. I just had a conversation with some folks at lunch, and someone who runs a construction business, commercial, and saying they're seeing a significant slowdown. And cash payments are rough. And this is a small business owner, you know, and I'm just trying to understand in terms of the metrics that are out there. We have the official government data. We all have conversations saying, I understand inflation's down a lot than it was a year ago, but my world feels pretty expensive. What is it that you lean on? Like we just talked about this relationship between the average of gross domestic income, right? And what was the other one? Income.
GDP and
So like I'm trying to understand how do you guys really figure out where we are? Do you rely on the official statistics or is it other stuff?
That's a great question, because I think what's happening here is that a lot of the pandemic, what the pandemic did, it makes for a more challenging collection of government statistics. So, for example, housing starts have been overstating the increase in starts recently, and those data have been incrementally revised downwards. So do the labor market data that we have been seeing consecutive months of downward revisions. So I think what's important in gauging the signal of the economy is, for us, we are placing more emphasis on data that we think are better measured, and one of them is wages measure. I think it's easier to collect information on prices than on quantities, and the prices are basically telling us that, well, if wage growth is really slowing by that much, then the labor market, in fact, is slower much more than these non-farm payroll data or JOLTS data are telling us, and that has served us well so far.
Oh, okay, that's helpful. Want to weigh in?
Yeah, I think that is the right approach. If we look on a year-over-year basis at different measures of wage growth, average hourly earnings, average weekly earnings, employment cost index, personal income data adjusted for non-farm payroll growth, they're all slowing in a range of about 3.5% to 4.5%, which still needs to cool off a little bit. You still need to see some cooling in the labor market.
But it's slowing.
It is slowing, yes.
Because I think about, right, we keep thinking wage pressures. We hear it from CEOs.
Maybe, though.
But that's interesting.
It's not the same as it was a year ago. You know, I don't know if companies, we're not hearing from companies that are having as much trouble finding employees as they were last year.
It does feel like certainly a softening. Guys, thank you so much. I love when we can do really a deep dive, and to have two from the Bloomberg Economics team, it's just killer. Anna Wong, Chief U.S. Economist. She's the boss of Bloomberg Economics out there in Washington, D.C. And Stuart Paul, love it. Really, truly dynamic duo. U.S. Economist at Bloomberg Economics here in our Interactive Brokers studio. You are listening and watching Bloomberg Business Week on Bloomberg Radio, on YouTube, and of course on Bloomberg Originals. Carol Master with Tim Stanovic. More to come right here on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Apple shares up now by 1.8%. Sources tell Bloomberg Apple is testing the use of 3D printers to produce the steel chassis that's used by some of its upcoming smartwatches. It would represent a major change to how Apple manufactures products. We have got stocks advancing with the S&P up 16 now at 4513, back above 4,500 with the S&P up by about 0.4%. S&P, by the way, up for a fourth straight day. The S&P again up by 0.35%. The Dow up 35 points, higher by about 0.1%. NASDAQ, the composite index, up now by 63 points, up by about 0.5%. 10-year yield 4.11% with a 2-year that's yielding 4.89%. Spot gold, little changed, up by about 0.3% right now, up $6.24 the ounce to $19.43. West Texas Intermediate crude up 0.6%, 81.63 a barrel. Jobs front and center as Wall Street looks ahead to claims data tomorrow morning, and of course the all-important jobs report on Friday. Today we got ADP data showing American businesses added jobs at the slowest pace in 5 months in August. Reaction to the ADP report from Kelsey Barrow, fixed income portfolio manager at JP Morgan Investment Management.
The hiring rate is down to the lowest level since January of 2018. So not just back to 2019 levels, but actually weaker than that. And this is really what we've been anticipating within our call, expecting that the labor market was weakening beneath the surface, that we would see it more explicitly in the headline data as the year progressed, and this would allow the Fed to be able to pause at this level of the Fed funds rate.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Among the names reporting after the close of trading, CrowdStrike up right now by 1.8%. Salesforce.com also after the bell up now by just about 1.3%. Recapping stocks higher, S&P up 18, up 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we do want to talk about the hurricane. Idalia, am I saying it right? Idalia? Idalia. It sounded weird in my ear. Anyway, more importantly, knocking out power to hundreds of thousands of customers, grounding more than 800 flights, unleashing floods along Florida's coast, far from where it came ashore as a Category 3 storm earlier Wednesday. So we've been all tracking it. I'm sure you all have seen it on news, no doubt about it.
Yeah, and Carol, we track how much this stuff costs very closely because there are serious economic implications for disruptions and for repairs caused by storms. We talked about it with Hawaii.
Yeah.
Estimates, too, are starting to come out about the cost of this storm. Enki Research says that it may lead to $10 billion in losses, and we know our team has already warned about FEMA running out of money following the fire in Hawaii.
All right, so let's get to it. Lee Mayfield is with us. He's Director of Response at the emergency management consulting firm Haggerty Consulting, also the former Director of Public Safety and Emergency Management for Lee County, Florida, which includes Cape Coral and Fort Myers. He joins us on the phone from Tampa. Also with us is Rob Carolan. He's a Bloomberg News meteorologist. He joins us on the phone in New York. Rob, I do want to start with you. What's the latest on this storm and what you are seeing?
We're seeing it in the process of working its way towards the Brunswick, Georgia area. Carol, it's now causing wind gusts in the vicinity of Brunswick. It's 60 miles an hour. Douglas, Georgia, also reporting 60 mile an hour gusts. Moving off to the northeast at 20 miles an hour. There's a tornado watch that's in effect from the coastal areas of northeastern Georgia along the South Carolina coast and into southeastern North Carolina. That's up through 9 o'clock this evening. The worst of the weather in regards to rain is north and northeast of that center of circulation. That's west of Brunswick, Georgia. We're going to see 4 to 8 inches of rain across that area over the next 24 hours, which is going to lead to flash flooding near the core of what was the eye of the storm. That's where the highest winds are. You just mentioned the power outages. You look at the track map, you look at the power outages, they match right up from where it went inland at Keaton Beach, Florida this morning and where it is now. Over the next 6 to 12 hours, the track will change from northeast to east-northeast. So it's going to allow the storm to move across northeastern Georgia, then up through eastern South Carolina tonight. Computer models, the latest ones coming in, have the storm then exiting the U.S. coast just east of Wilmington, North Carolina, around 7 o'clock tomorrow morning.
So after 7 o'clock tomorrow morning, Rob, the worst of it is behind us?
The worst of it will be behind us. We'll notice that it's probably going to become a strong tropical storm overnight because the core is still inland. So what's happening is those winds of 125 miles an hour when it made landfall this morning are slowly winding down. We'll probably still see some gusts up over hurricane force strength later tonight into tomorrow morning, especially along the South and North Carolina coast. The Outer Banks will probably see those type of winds. But once it gets out into the Atlantic, all the really heavy rain that we're seeing north and northeast of the center will push out into the Atlantic, and the flash flooding issues will go away. The only remaining issues will be some winds through midday tomorrow along the coast of North Carolina and about as far south as Myrtle Beach, South Carolina.
Hey, one thing I want to get into, listen, we have storms, and we've had, my whole lifetime, hurricanes, we have hurricane season, and I'm not playing light to it, and there's lives at risk, and hope everyone that is in the path of this storm does okay. But what I want to get to with you, Lee, and then Rob weigh in on this as well, is in terms of what we increasingly are seeing in terms of the frequency, strength, force, and the impact and the amount of damage done by storms and how climate change plays into it. Lee, how are you thinking about it bigger broadly, and what worries you?
Sure, great question. I think it's been almost a year since Hurricane Ian last year in the Southwest Florida area, and here we are again. So I think this is part of our new reality. We seem to have had a very busy 5-year period, especially when it comes to these devastating hurricanes, and this one is no different. Idalia is an incredibly catastrophic storm, so I think really brings front and center this idea of resiliency and recovery, and what does that look like moving forward as we see more of these storms.
Well, what does resiliency look like? Does it look like actually people not living in places where they've traditionally lived, Lee?
It's a team effort. This business and emergency management and resiliency takes a lot of different players. Local jurisdictions, state, federal government, NGOs, private sector. Funding is a big component of this. So I think that's something we have to seriously look at, how we fund these larger projects as we look towards resiliency and mitigation moving forward.
Well, and Rob, come back into the conversation. In terms of the frequency and the volatility and the damage and the strength that we are seeing increasingly with the storms that impact the United States and really the world at large, but the U.S. that we've seen. I mean, look at what happened on the West Coast. A storm just doesn't happen, and there it happened just, was it a week ago or so? Should we be thinking as a nation about not building on certain areas because it's just getting tougher and tougher for people to exist there?
Well, that makes sense just from the fact that, barrier islands of the coast are temporary landforms. They're not really meant to be built on. The last time we saw a hurricane or a tropical storm hit the West Coast was September of 1939. One of the things we meteorologists are aware of in the hurricane cycle is there's a 30-year cycle with hurricanes. So the last peak ran through the 1950s into the 1970s. We had a tremendous amount of storms go up the East Coast in the 1950s. We had Hazel, Carol, Donna. They all occurred in less than 10 years. We're now in the midst of another very active cycle that should start to end in the mid-2020s. It's been running since the mid-1990s. It starts to decrease around 25 or 26. So we've got a couple more years with that. The other thing that we really have to take a look at is the oceans on this planet are getting warmer. We're in a very warm cycle. These storms exist to do one thing: move heat from the tropical regions of the world to the polar regions. That's why they move around the Bermuda High. They take that excess warmth that develops over the oceans during the summer and pushes it to the poles. They're heat engines, so they're trying to redistribute heat. The warmer the oceans are, the stronger these systems are going to be. And the other thing I've noticed, I've been doing this for a little over 30 years. In my career, the fact they are intensifying much more rapidly. From Katrina in 2005 becoming a storm of, incredible magnitude in 36 hours. It went from a Cat 1 to a Cat 5. We had the same problem several years ago with Irma and Maria. They became Category 5 hurricanes in just a few days. This storm went over waters that were 90 degrees or warmer over its 72 hours in existence, and that's how you get a storm to go from a Cat 1 to a Cat 4 overnight. It's the ocean driving this problem.
Lee, weigh in on that. Do you agree with Rob that this is the warmer oceans are doing this, and it's intensified throughout your career as well?
Yeah, we've certainly seen this idea of rapid intensification is just really a big fear even of emergency managers. Hurricane Michael comes to mind, and this one here is no different this week. You're having to make decisions very quickly when these storms rapidly intensify, and that's something that is difficult to do from a timing perspective, and definitely a concern that we're having to deal with more in our profession.
All right, we're going to leave it on that note. Listen, guys, thank you so much for weighing in on all of this and giving us some perspective. So appreciate it. Lee Mayfield, Director of Response at the emergency management consulting firm Haggerty Consulting. As we said, also former Director of Public Safety and Emergency Management for Lee County, Florida. And our thanks to Rob Carolyn. He's a well-known voice when it comes to covering what's going on in the weather. A Bloomberg News meteorologist joining us, both of them on the phone, one in New York, Rob there, and of course, Lee in Tampa. Do you want to mention a headline, Tim, crossing the Bloomberg terminal?
Yeah, right now, Wall Street Journal is reporting that the Department of Justice and SEC are investigating Tesla over a secret glass house project. Manhattan federal prosecutors are investigating Tesla's use of a company funds on a secret project that had been described internally as a house for CEO Elon Musk. People familiar with the matter said this story from the Wall Street Journal by Rebecca Elliott and Dave Michaels.
Yeah, the U.S. Attorney's Office for the Southern District of New York has sought information about personal benefits paid to Musk, how much Tesla spent on the project, which called for a spacious glass structure to be built in the Austin, Texas area, and what it was for, according to the People. Stock right now, Tesla shares just down about 0.4%.
I thought he didn't care about houses and where he sold all his houses, doesn't care about where he lives.
I just thought people who live in glass houses or want to build glass houses.
Oh, that's what you thought of. I like that.
Yeah, I thought he did. Did he sell all his homes?
He did, yeah.
It's always interesting.
That's Elon for you.
Has to do with Elon. All right, everybody, you are listening and watching Bloomberg Business Week. Let's get to Denise Pellegrini with a check on world and national news. She is in our Bloomberg 1130 newsroom. Hi, Denise.
Yeah, that was a great conversation you guys were having just a minute ago about Hurricane Idella giving a tough time to Georgia right now. The Carolinas are next, where a tornado watch is in effect for some areas. Wilmington, Charleston, Myrtle Beach on flood watch. South Carolina Governor Henry McMaster saying Charleston and other low-lying communities are the ones on the highest alert right now.
It'd be better for all if it were coming at low tide, but it's not. So that gives us reason to know that we will have a lot of water in the low country.
Meantime, back in Florida, where Idalia made landfall as a Cat 3 hurricane early this morning, hundreds of thousands are without power, flood damage being tallied. Storm of comments on social media after Senate Minority Leader Mitch McConnell appeared to freeze. As we've been reporting while taking questions from reporters in Kentucky, here's what it sounded like.
I'm sorry, I had a hard time hearing you.
That's okay. What are your thoughts on running for re-election in 2026?
What are my thoughts about what?
Running for re-election in 2026.
Uncomfortable pause here. This is what reporters heard.
Did you hear the question, Senator? Running for re-election in 2026? Yes. All right, I'm sorry, you all. We're going to need a minute. Senator.
And then no comment on this latest incident yet from McConnell's office. Health officials are recommending easing restrictions on marijuana. A top official at the Department of Health and Human Services asking the DEA to reclassify marijuana as a Schedule III drug that would be under the Controlled Substances Act. It's currently a Schedule I substance that includes drugs like heroin, considered to have a very high abuse risk and other dangers. Global News 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Denise Pellegrini, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg. We're on track for 4 in a row for the S&P 500 index. Stocks higher across the board. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with a bid today, with the Dow currently up 44 points. S&P's gained 17, and NASDAQ is higher by 0.5%. The U.S. 10-year yield at 4.12%. Gold is up 6. Oil trading in the green. But Bitcoin is down by 1.2%. Among the main 11 S&P sectors, leaders were tech and energy. Only utilities were in the red. And leaders to the upside in the Dow, Apple, Salesforce, and Home Depot, while 3M fell 1.3% and led to the downside. After earnings, Brown-Forman fell 4%. And in the tech space, Apple tests using 3D printers to make devices in a major shift. And in other news, Visa and MasterCard are preparing to raise credit card fees. Wrapping things up, some of the names pointing after the bell tonight include CrowdStrike and Salesforce. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's session, and we're watching, a market where, you read through the economic news and maybe investors once again thinking, okay, maybe the Fed is getting near the end, because we've got a little bit of a rally in what the S&P 500 up, is it for a fourth day in a row?
Fourth day in a row, 45.14.
Yeah, so we're above that 4,500 mark.
Okay, so much for the August doldrums, Carol. Month to date, the S&P is only down 1.5%.
I don't call them doldrums
What do you call
there's
them?
Always fireworks in August. At least the last, I would say, last 5 years, 6 years. I don't know.
There's one more day of the month, and we could potentially be, flat for the month.
There's some drama. We did see yields back off a little bit. You heard Charlie talking the numbers. Let's see what Hank Smith has to say about this environment. He's CIO of the individual and institutional wealth management firm Haverford Trust. He joins us on the phone from Radnor, Pennsylvania. Hank, good to have you back with us. How are you, and how are you thinking about the market environment right now?
Well, it's great to be with you. Good afternoon, and I am doing very well, thank you. This has been one of the most interesting years in my 38 years in this business. And there's that Wall Street adage, bull markets climb walls of worry, and that has never been more true than this year when you consider everything the market has overcome in terms of very elevated inflation at the beginning of the year, the most aggressive Fed rate hike cycle that we've experienced in 30 plus years. Also, 3 bankruptcies and the potential for another banking crisis, and concerns about commercial loan repayments, concerns about student loan repayments, and the market has just seen its way through it all. And we continue to remain pretty optimistic, but recognizing that we could very well, Carol, have a relatively flat rest of the year, but the broad market do pretty well. So in other words, if the so-called Magnificent Seven stall out here, which they clearly need a breather, you could also see plenty of laggards pick up the slack, yet the broad averages remain relatively flat.
Can I say there is a point, like if you're an investor, at least on the equity, I'm doing plain vanilla, you're looking at a NASDAQ 100 that's up 41% so far this year, and you're looking at an S&P 500 that's up 17%. Mind you, I'm just doing the bigger, broader averages. To kind of put it in the bank, take a money market or some kind of you look at what treasuries are yielding and just say, I'm good in 2023. Like, you can see why people might just take a breather.
Absolutely, but look, small stocks offer tremendous opportunities. The equal-weighted S&P 500 is half of what the market cap-weighted S&P 500. So there's plenty of opportunities, and even in terms of valuation, the valuation of the market-weighted cap S&P 500 is skewed by those handful of tech stocks that are driving the valuation higher. But if you look at the equal weight S&P valuation, it's much more reasonable.
So where are the opportunities for the stocks that haven't yet had the room to run or haven't run yet this year?
Well, I think, look, it'd be very healthy to see a broadening out of the market, and we saw a little bit of that in June, and then it was back to the Magnificent Seven driving the market, after June. So I think there is opportunities both in healthcare, which has been a laggard, in consumer staples, which have been a laggard, and we have pretty decent weightings in those two sectors.
Where don't you want to be? Is it just those names that have really led the big outperformers? And I hesitate too, if I can just do a kind of a second question, that every time everybody's like, stay away from the big tech that have led, and then they have another drive up. That's significant.
Right, and so this year has been a mirror opposite of last year. And who would have predicted that after sustaining those very significant corrections, the tech stocks would come roaring back? But it's hard to get excited about buying those stocks after the kinds of moves they've had. So we would caution investing in that area. And plus, it's hard. You know, if you are trying to beat the index, you need to own more than 7% in Apple and Microsoft. And if you're a fiduciary, that's very difficult. You just don't buy that much in two stocks.
That's a really interesting point. Okay, so I guess my question is about those sort of unknown unknowns. What's out there that concerns you?
Well, look, whenever you're growing below trend line, as this economy is right now, despite what the Atlanta Fed tracker is forecasting for the third quarter, you are susceptible to external shocks. The problem is you can never identify those external shocks. And certainly back in March, with that mini crisis, banking crisis, one would have thought at that time, this is an external shock. And yet the market low, or nearly the market low for this year, was the day Silicon Valley Bank went bankrupt. And you could never have then said, let's buy stocks. We're going to be up 15% from here over the next handful of months. Yet that's exactly what happened. So I think the concerns about the beginning of the repayment of student debt, it's a concern, but I don't think that's going to be a big factor that is going to affect the economy one way or the other. And people have been talking about it for months now, so that's not a big issue.
10 seconds, Hank. New money, put it in the equity market, put it in cash, put it in treasuries. If you had to pick between those three, where do you do it?
Well, look, as long as your time frame is 3 to 5 years, put it in equities.
Interesting. Okay. Are you holding cash, though, a lot for your clients right now? Really quickly.
No. Okay. Very little cash. But I can tell you the clients where we have a balance between stocks and bonds have been very, very happy with the rise in interest rates.
Interesting. All right. Good stuff. Hank Smith, thank you as always. CIO of Haverford Trust on the phone from Radnor, Pennsylvania. Just got about 10 minutes left in the trade. This is Bloomberg Business Week.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Tesla shares trading lower by 0.4%. A Tesla plan to buy hard-to-get construction materials is being investigated by federal prosecutors who are looking at whether the project was an appropriate use of company funds. Apple said to be testing the use of 3D printers to produce the steel chassis that are used by some of its upcoming smartwatches, heralding a major change as to how the company manufactures its products. Well, one of the big issues for corporate America has been doing business in China, as highlighted by recent remarks from Commerce Secretary Gina Raimondo in Beijing, saying she has heard from firms that China is becoming increasingly uninvestable. Peter Cheer is head of macro strategy at Academy Securities, and on surveillance this morning, he was asked what it means for the likes of both Tesla and Apple.
I think we are already seeing some of those companies move their supply chains, develop around this, right? So they're looking at that. And I think that's been stage one of this. I think stage two is going to be how do we protect our brands in some other countries? So I think companies are now maybe a little bit behind as a whole, but dealing with the China issue. And I think what they've got to get ahead of is what are we going to do with the rest of the emerging markets as China becomes potentially a competitor of low cost, they're going to flood the market with their low cost, maybe lower quality goods. And that's, I think, what we have to be thinking about.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Among the names reporting after the close of trading, Salesforce and CrowdStrike. And those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week on Bloomberg Radio. I'm Carol Master along with Tim Stenivek. And just a few minutes, we're going to head over to Romaine and Katie, count you down to the close on this Wednesday. We've got some more big economic news coming our way. Don't forget, tomorrow, and certainly the monthly jobs report on Friday that certainly will probably could maybe change how we think about rates and what the Fed does.
Is the big economic news potentially a new Lego movie?
Oh my God! Did you see this?
I did. Is that's not what you're talking about, though, or that is what you're talking about? The big economic news.
Thank you,
Lego?
Barbie.
Okay, thank you.
It all goes back to Barbie. Lego had great success with its 2014 Lego movie. Now that rival Mattel has reached blockbuster status with its summer hit Barbie, the Danish toy maker may soon return to the silver screen. This is coming from its CEO, kind of suggesting it in a phone interview with our Bloomberg team.
Yeah, Niels B. Christensen said in a phone interview, quote, "I must admit that I also want us to tell our stories in the film format again at some point, and we're also looking at that. It's good to see the strong interest in films, and we're taking note of that as we move along with our own projects. We should note that, Carol, that Lego has not released a theatrical movie since 2019.
That's interesting. We are in such a, demand for content. And interesting. I think what happened with the Barbie movies, yep, there were messages and it was fun. It was just something different too. I mean, there's a lot of, kind of legacy movies, right? Where there's, just one thing after another. And this was something new. And if you've got, if toys can actually be funny, Toy Story.
What's
Go
funny,
back to
though,
Toy
Carol?
Story. It was so adorable.
So you say it's new, but the IP for Barbie is decades old.
Absolutely. Like, why did it take so long,
for this type of Barbie movie? I mean, I think a lot of it has to do with Greta Gerwig. A lot of it has to do with the creative liberties that Mattel allowed her.
Right. Exactly. We should
I don't know. Can lightning strike twice?
Yeah, absolutely.
Okay.
I mean, Lego's actually already had 3 successful, follow-up films
but
to
no
that
Barbie.
2014 hit. Yeah. Okay. I know.
No Barbie.
Wow, nobody compares. You walk around in high heels for a long time and,
You're right, though. The 2014 hit did gross about $470 million globally. That
4 times its budget.
That is a lot of money.
Yeah. I mean, so they, obviously, I think what happens is they're like, oh, yeah, we did really well at this. Why don't we do some more?
Okay.
Get ready, folks. Maybe Barbie builds a Lego house. No, it's not going to happen. All right, stick around.
Crossover.
Beyond the Bell. It starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Carol Massar and Tim Stenovic. Welcome to our audiences across our Bloomberg platforms on a Wednesday afternoon that's setting up, Carol, to be a fourth straight day of gains. And more importantly, the S&P, if you care about these milestones, looks like it is going to close at that 4,500 level for the first time since earlier this month.
Gives us something to talk about. Now, you know, sometimes traders, investors, right, like these round numbers or these benchmarks, if you will. But I think the idea that there's been 4 days of consecutive increases on the S&P 500 after an August that's been a tough one for the equity universe.
I mean, a tough one sort of until yesterday, I would say. You know, at one point, the S&P 500 was down as much as 5.5% on the month, and we were all kind of talking, okay, August is, you know, seasonally not a great month. September is the worst month seasonally. What's September going to look like? But now we're to the point, Katie, where, you know, for August, we're only down 1.5% on the S&P 500, and there's one more day to go.
One more day to go.
Wow,
yeah.
Tim, you got a lot of optimism there. Tim calling the 1.5% rally tomorrow.
Again, I mean, I know it is 4 straight days of gains.
I'm a glasses half full type of guy. What can I say?
Potentially 1.5% tomorrow. We'll see what happens. But again, you look at the dog days of summer. Trading volume has been so low. How much conviction you can put behind these moves, I really don't know. But as someone made the point to us, tomorrow is month end. Tim knows that very well. We're probably going to see that trading volume pick up.
Yeah, potentially see that pick up, of course, as we come back from the Labor Day holiday. Meanwhile, just 1 day removed from the end of the month and, well, I guess a couple days removed from the end of the week. Stocks up for a fourth straight day, at least for the S&P and NASDAQ. The S&P 500 higher by 17 points or 0.4%. A close right now at about 45.15 as we wait for these numbers to settle here. That's a 4-day, 3% rally for the S&P. Unfortunately, Tim, that may not be enough to save it from its first monthly decline since February. Similar story for the NASDAQ, which is higher by 76 points or 0.5%. A close at that 14,000 level, while the Dow Jones Industrial Average moving higher a smidge by about 0.1%. The Russell 2000 trying to get in on the action as well, higher by about 8 points or 0.4%.
All right, back to the S&P 500. I go off of those closing numbers from Romaine. S&P 500, look at the mix, 317 names to the upside, 177 to the downside, and Katie, we had 9 names unchanged.
All right, let's take a look at some of these sector levels as well. The industry groups, you have more green than red. You take a look at what's leading. It's tech and tech hardware up by 1.6%. Consumer durables, those semis also getting in on the action. You go down to the bottom of the list. What did fall today? Banks at the bottom, off by 0.6%, Carol.
All right, so let's get to some of the individual gainers. A little bit trickier today, although there definitely were some standouts. I do want to mention Visa and MasterCard. Not even, do we want to go to Octo or do we want to
just keep going, Carol.
Okay, I'm going to keep going. Visa and MasterCard just up a little bit. Visa up about 0.4%. You had MasterCard up about 0.5%. We were all over this story. It was among the most read. Gaining after a report first in the Wall Street Journal and then reported out by Bloomberg, the two planning to boost the fees that many retailers pay when accepting customers' credit and debit cards. These are always contentious. They get a lot of attention, and you do wonder whether ultimately this too gets passed on to consumers. But nonetheless, those names gaining a little bit. NVIDIA up about almost 1%, just shy of it. It is up about 20% since August 11th. The stock's biggest bull, Rosenblatt Securities' Hans Mosesmann, sees the market cap rivaling Apple. His price target implies a 2.7 trillion market value. And analysts have just keep increasing their target. Right now, they've risen to about 32% above NVIDIA's stock price, so increasingly bullish on that one. Just want to mention Lyft real quickly, up 8.5% in today's session. The director, Prashant Agarwal, reported an insider stock transaction to the SEC. Lyft, by the way, up 3% year to date versus about an 88% gain for Uber. So a little comparison there, Tim.
All right, you got the gainers, Carol. I got some of the decliners. I'll go through these very briefly. I know there's some earnings that we want to get to. HP Inc., ticker HPQ, falling today by 6.6%. The company cutting its profit outlook late yesterday after the market closed, acknowledging that a rebound in PC demand is not coming as quickly as hoped. And we got to talk about Brown-Forman, the maker of Jack Daniels, Woodford Reserve, Finlandia Vodka, and more, falling 4% today, reporting earnings per share and sales for the first quarter that missed consensus estimates. Also, first quarter operating margin coming in below estimates as well. And here's an interesting one. Boat makers today taking a hit. This all due to results from Mastercraft, that company reporting annual net sales and adjusted EBITDA forecasts that missed the consensus estimate. So as a result, you had companies like Brunswick Corp fall 4.6%. They make Bayliner, Quicksilver, Sea Ray, and more. Malibu, Marine Max, all falling as well.
All right, let's get to some of those earnings. Okta Crossing, as we said, Fed, and we're taking a look at third quarter adjusted EPS, some forecasts here, looking at 29 to 30 cents. That looks like a big beat. The estimate on the street is 20 cents. Third quarter revenue, they're looking at 558 to 560 million. That too, upside there. The street was looking for 551.9 million. And then if you look at fiscal year revenue overall, 2.21 billion to 2.22. They had seen 2.18 to 2.19. So this looks like some optimism, and you are seeing investors remain pour into it. It's up about 13% in the aftermarket. They do, mobile identification, if you will. It's an application software. It's only up about 7.5% this year, but man, it's getting a pump up, if you will, in the after hours.
Yeah, absolutely here. And we should point out we're going to get some other earnings, including we're expected to get Salesforce and CrowdStrike a little bit later. A quick check on what's going on with yields. Remember, for the most part, we came into this session with yields higher, but they ended the day modestly lower here on the day. You're looking at about 4.9 on 2-year yield. Your 10-year yield basically still stuck at right around 4.11. Your 20-year unchanged. We had a 7-year auction earlier today that went, I guess, about as most people expected, Katie.
Yeah, I think it's fair to say with moves that small, you can pretty much say that's unchanged. Of course, it's going to be the bond market where I'm going to look when we start to get some of the big economic data releases we're expecting towards the end of this week, particularly at the front end. We've seen that Fed rate hike wagering for the rest of the year really come back, Tim.
Yeah.
Can we?
Oh, yeah.
Sorry,
go ahead,
just I don't know how much you've been following this whole issue over Sculptor. We're going to get some headlines here. Remember, Sculptor has, I guess, pretty much repeatedly rebuffed Danok's demand for what he was looking for here. We're now learning that they've done another review here, and we've learned that this special committee has now responded and said that the latest proposal, in its words, doesn't constitute a, quote, superior proposal, and that it reaffirms its recommendation to go forward with that rhythm deal. So a lot of drama, of course, going on with the former fund over there, and Sculptor basically deciding that it wants to move forward with that rhythm deal. We do want to go back to earnings now. Salesforce earnings crossing the wire here. Your 2Q numbers on an adjusted basis. EPS coming in, well, at $2.12 a share. Not quite sure what that compares to just yet, but we'll try to get you that. On an operating income basis, $2.72 billion. That looks like a beat versus street estimates of $2.42 billion. Revenue overall rising about 11% in the quarter. The company also saying that for the full year, it's going to give a revenue guidance of $34.7 billion to $34.8 billion, which is roughly in line with what they had before. The previous range was 34.5 to 34.7. So overall, it looks like a beat for the second quarter numbers, and the guidance going forward for the full year and the third quarter, a smidge above what the street was looking for on average.
Yeah, I mean, this is a stock that's definitely been a standout, certainly here in 2023. It's up about 61% in the regular trade. We're seeing another bump higher of more than 4% in the aftermarket. Mark Benioff, chair and CEO of Salesforce, in the release saying our transformation drove our strong second quarter results, delivering revenue of $8.6 billion and record GAAP and non-GAAP operating margins. He goes on to say, based on our performance and what we see in the back half of the year, we are raising our fiscal year 24 revenue, operating margin, and operating cash flow growth guidance. And then talks a little bit more about his industry. Keep in mind, he also talks about leading our customers into the new AI era. This is important. They've been coming out, with a new suite of AI features. They did this in June. So, it's going to cost, I think, something like $7,200 a year. But we go to see how much this is maybe driving some of the numbers. And maybe this is why we're seeing this bump up in some of their forecasts.
Yeah, continuing on in the release, the company's president and CFO, Amy Weaver, is saying that they are accelerating our transformation and continue to drive strong shareholder growth, pointing out the company delivered 17.2% GAAP operating margin and 31.6% non-GAAP operating margin, Katie.
And yeah, I mean, you can see the enthusiasm in the after hours move. I do want to go to CrowdStrike as well. That company also out with their second quarter earnings, and it was pretty much in line with estimates. You can see that in the kind of muted price reaction here. Let's get specific. You look at second quarter revenue came in at $731.6 million. The estimate had been for $724.9 million. So again, pretty much in line. Second quarter adjusted EPS, that was a beat, 74 cents versus the estimate of 56 cents. But again, you look at that muted reaction going back and forth here, probably comes back to this outlook. Full year revenue seen between 3.3 billion to $3.04 billion. That is pretty much bang in line with what they had already expected, $3 billion to $3.04 billion.
All right, guys, let's also get to some other earnings because we do have Chewy. We all have our little pets at home, and Chewy coming out with its latest update, talking about fiscal year net sales of $11.15 billion to $11.35 billion. The forecast out there is $11.31 billion, and also talking about seeing fiscal year adjusted EBITDA margin about 3%. We are seeing Chewy up about 6%, 7% in the after hours. Third quarter net sales $2.74 billion to $2.76. Estimate out there is $2.79 billion. And I'm just looking at what that stock's down 26% this year. So getting a little bit of love in the after hours. About 70% of the float is shorted. So we might be seeing some short covering as well if these numbers are coming in a little bit better than maybe forecast. All right, guys, that's a wrap. A lot of earnings. Tail end of the earnings season.
Yeah, but you know what? We're going to miss you guys tomorrow. We're not going to be here.
Yeah, you're going to tennis.
Yeah.
We're going to get
tennis. I think people, of course, should watch the close. But if you're interested in, a little bit of tennis, what's going on at the U.S. Open,
and you're taking off for that?
Tune into Bloomberg Radio.
We're actually working.
No, Romaine.
Oh, you're working.
This is
it's
work,
kind of
okay?
a way of feeling what the consumers
Someone's got to do it, okay, Romaine?
Interesting.
So we will.
I was planning to go to the U.S. Open. Can I come there and just heckle you guys from behind?
You can come on and come on. You
could
actually come on with us. That would be a lot of fun. So you can stop by.
Maybe next year you guys do the close from
Katie,
there as
you
well.
can come too.
Or maybe not.
I don't think so.
All right, that's a wrap, guys. So we will see you. I will see you in a little while. I'm going to take a little vacation, but
what?
But the team.
What's happening over there?
I'm going to call it a big vacation, Carol. I'm going to go ahead and change the definition.
We're all doing our part for the economy with our time off.
Okay, stay in the U.S.
All right. I will. All right, guys, that's a wrap. We'll see y'all kind of ish tomorrow. All right, we keep saying it over and over again. We get a 24-hour news cycle with a lot of news out of China, and I feel like I've been saying that for the last 2 or 3 weeks. And our Balance of Power newsletter coming out today noting all roads no longer lead to Rome, they lead to Beijing. And this as U.S. Commerce Secretary Gina Raimondo was wrapping up her trip to China. You had the UK Foreign Secretary also arriving. That's the most senior British diplomatic visitor in 5 years. Russian President Vladimir Putin's likely to visit as well in October.
That's a big one.
Yeah, to meet up with President Xi. And so there's a lot going on.
Yeah, we're really glad to have back with us for some analysis, for insight on the situation, also for the market and business outlook of China. We've got Andy Brown with us. He's the former editorial director at Bloomberg New Economy, and he spent 3 decades in Asia as both China editor and a columnist for the Wall Street Journal. Today, Carol, Andy leads the China Hub as a partner at Brunswick Group. It's a critical issues advisory firm. He joins us on Zoom from New York City.
Andy, so good to have you back with us. We've been dying to talk to you because you really always give us some clarity on everything that's going on. So as our Balance of Power newsletter said, all roads no longer lead to Rome, they lead to Beijing. Are they right?
Well, first of all, it's great to be back on the show, Carol, Tim. It's always terrific to be with you. All roads lead to Beijing. Certainly, Gina Raimondo's road led to Beijing. And by all accounts, a very successful visit. The Chinese take Gina Raimondo very seriously. They trust her. They seem to have a good relationship with her. They find her pragmatic, relatively non-ideological. And this is really quite remarkable, given that Gina Raimondo is at the sharp end of U.S. economic engagement with China, right? She's the one that presides over this proliferating regime of sanctions and export controls and tariffs, which, of course, this administration inherited from the last one. And the Chinese find this deeply threatening. Nonetheless, she had a pretty good visit. And her main message was, no, we're not here to kill you. We don't want to put you out of business. This is not decoupling. This is de-risking, and that's a very different thing.
Well, what did you make of her comment that she argued that China is driving away American companies by making investments in the world's second biggest economy increasingly hazardous? She said that, okay, here's the quote, Andy. I know you know it. We talked a little bit about it yesterday. Increasingly, I hear from businesses, China is uninvestable because it's become too risky. This is what Gina Raimondo told reporters Tuesday when she was aboard a high-speed train from Beijing to Shanghai.
I mean, investment flows have been flowing out from foreign investors.
Well, she said the right thing, and that's what they need to hear. because quite often in China, the CEOs of the companies that are investing there don't dare speak that kind of truth to power. And so, it takes a Gine Raimondo to go over there and say, look, we have a problem, and businesses certainly do have a problem now in China. But it's still, I think it's significant, though, the second part of your commentary, she went on a high-speed train.
Mm-hmm.
That's interesting, right? That's kind of a common touch. She hopped a train to go down to Shanghai. The Chinese would have liked that. They showcased their, really unbelievably efficient 200-mile-an-hour, 4.5 hours from Beijing,
That sounds nice,
to
doesn't it,
Shanghai,
Gerald?
which is like unbelievable.
We don't have that here in the U.S.
What is it about her that resonates so well with Chinese officials?
Well, I think they feel that they can talk to her and they're going to get a straight answer, and that really was, and she also, she's constructive, right? So I thought actually she handled it in a really smart way. She said, look, let's start with confidence building measures. So one of the things that she's agreed on is that the United States and China are going to promote travel, right? Tourism. So who can disagree that it would be a good thing if more Americans went to China and more Chinese people came to the United States, right? It builds trust, builds understanding, people-to-people relations. These countries have been separated now for 3 years under lockdown. Very few flights now. I was in Beijing a couple months ago. I was actually staying in Four Seasons Hotel. I was the only foreigner in the whole hotel, right? I mean, the airport is half empty. We need more interaction, and it's just a great place, a smart place to start.
Well, Andy, talk more about that and give us some anecdotes from your recent trip there, because you've spent so much time in the country. I know this is post-pandemic. You went there kind of during the pandemic too. When you were helping with the Olympics for NBC,
right?
But just give us the differences that you see now based on your recent trip.
Yeah, well, I mean, you got to go. I mean, you have to go there to feel this. The sense you get by talking to people on the street, my friends, people in the business community. People are kind of in shock, I mean, I understand this. Consumer confidence has really been shattered. I mean, people, I think, feel really kind of discombobulated, disoriented. I mean, what just happened? We went through a three-year lockdown. And it was quite painful. I mean, you talk to people in Shanghai, they're suffering from something like post-traumatic stress disorder, right? These are upper middle class families that didn't know if they were going to spend that night in bed in their own homes or be carted away to some isolation center, or if their kids would be taken from them, or if guys in white hazmat suits were going to burst through the front door, and drag them out, or put a lock on the outside of the door. They didn't know sometimes if they could even feed their families, right? And they've been so used to a government that looks after all this, that is focused on growth, focused on development, and it just seems like they're lurching from one blunder to another, and the business confidence obviously has yet to recover, and the confidence of foreign investors, and that's what Gine Raimondo was speaking to. People got so used to the idea that Chinese supply chains were secure, right? You could put them all in China. That's what Apple did, the whole lot. And look what Apple's doing now. It's starting at the margins, pulling it out, putting it in places like Vietnam, India. It's all about now de-risking.
All right, Andy, hang on for a second. You've been gracious enough once again to give us some additional time. So we're going to do a little bit of news, but we're going to come right back to you. We're going to get back to Andy Brown, as we said, former editorial director at Bloomberg New Economy, and really understands this country, has lived there, or understands Asia and China specifically, and of course now leading the China Hub as a partner over at Brunswick Group. We're going to get back to him in just a moment, because listen, leaders, companies are reaching out to he and his team, trying to make sense of what's going on, and this is why he's just such a valuable voice for us.
Yeah, back to what Secretary Raimondo said yesterday. If China's uninvestable, if companies complain about that, my next question for Andy is going to be, okay, well, if the economy is doing so poorly there, do American companies really even want to invest in China?
Well, and maybe yes, because we can't afford to have the second largest economy crater. And this is where we want Andy to weigh in. We're going to come back in just a moment right here on Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street, and we've got you covered on earnings as we check markets all day long here at Bloomberg. Salesforce delivered a revenue and profit forecast for the current quarter that topped analyst estimates, signaling progress in its campaign to cut costs following involvement by activist investors over the past year. After hours, we're looking at Salesforce. They are based in San Francisco. The stock up now by roughly 5.3%. Also reporting after the close of trading, CrowdStrike. It reported revenue for the second quarter that met the average analyst estimate. It's a cybersecurity company. CrowdStrike shares down now by 1.2%. Chewy, the pet food supplier, pet product supplier, reaffirmed its net sales forecast for the full year That stock moving higher by roughly 5% after hours. The Dow, the S&P, and NASDAQ gained today. Stocks rose for a fourth straight session as another batch of economic reports pointed to moderation, cementing bets that the Federal Reserve is approaching the end of its interest rate hikes. Stocks up today with the S&P up 17 points, up 0.4%. The Dow up 37, up 0.1. NASDAQ up 75, a gain there of 0.5%. 10-year yield 4.11% with a 2-year at 4.88%. Spot gold up $6 the ounce to $19.43, up 0.3%. And West Texas Intermediate crude up 0.7%, $81.70 for a barrel of WTI. So again, recapping, stocks higher, 4 in a row for the S&P 500 index, up 17, a gain of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Back to Andy Brown we go. As we said earlier, he leads the China Hub. He's a partner over at Brunswick Group. He's still with us on Zoom in New York City. And we were talking about this in the break.
Yeah, my question, Andy, is if China is doing so poorly in its attempted recovery from 3 years of lockdowns, if the consumer is so weak, if there are concerns about shadow banks crumbling and not paying people back, do American companies really want to invest in China?
You know, Tim, I think it's so important to put this into perspective. China is not collapsing, okay? China is suffering from what some people call the 4 Ds. You've got a demographic crisis, you have a debt crisis, you have a decoupling problem, you have a deflation problem. The headlines look terrible. And it is extraordinary. The Chinese economy is barely growing right now. And the U.S. economy is steaming ahead. I think it's growing, 6%? A complete role reversal, right? But are reliant on China for future growth, luxury, chemicals, auto, and so on. In those industries, they're pouring investment in. They have to. I mean, you can't be half-hearted in China. You've got to be all in because the competition there is really good. So if you're there and you're dependent on growth, you have to invest to keep up with the market. You have to invest in technology so that you're able to compete. And in fact, some of these companies have an aggressive strategy of investment. It's called in China for China, right? So they're buying local companies. They're investing in technology. If you don't have to be in China right now, you don't want to be in China. If you've never been in China, you're certainly not going to go there for the first time now. And if you are in China, money investment that you might have put into China over and above the need to fuel and fund your footprint there, you're now looking at that money and saying, where else could I put it? Should I put it in Vietnam or in India or in Mexico? Or I might say here in the United States, which is one of the hottest investment destinations in the world right now.
So do you believe in your consulting that you do with clients, Andy? I mean, is it right, though, for the U.S. and nations throughout Europe that have slapped trade and regulatory penalties on China, you know, their claims that it's coercive economic market behavior, if you will, are they right to do so, especially when you've got the world's second largest economy kind of going through tough times? Like, what's the balance between that?
Yeah, you know, look, Carol, I mean, it is in nobody's interest to drive China further inward. The country is looking inward now, right? And they feel threatened. They feel under siege. This is in nobody's interest. It's in nobody's interest now to exacerbate its economic downturn. It's in nobody's interest that China should want to build its own institutions and undermine the global US-led system. So, you know, and they do feel that they are under siege. And look, I get it that there are internal trends in China that, you know, are encouraging this move towards, this focus, a relentless focus on national security. But one also has to understand that China is responding also to actions that the United States is taking that make it feel that the world of the United States is out to get them. So, you know, they look at this meeting that occurred in Camp David with Japan and South Korea and the United States, and this just adds to the sense of of containment. So that's not in anybody's. And there are a lot of people that are saying, look, maybe it's time for a timeout on some of this. Would it be such a bad idea to lift the tariffs on China, which after all aren't achieving any of their objectives of narrowing the trade surplus, and in fact are being paid for in the end by the U.S. Consumer? And frankly, I think that this was something. Some of that sentiment is exactly what Gina Raimondo was expressing in her visit to China. The United States and China does $2 billion a day of trade, and she said, look, this trade is good for China, good for the United States, and good for the world. So, let's put some of this in proportion.
Andy.
Because could I just wait?
Yeah,
real
go
quick
ahead, Carol.
follow. If the world's second largest economy crater, we're going to feel it, right? Here in the United States?
You are, but it's not going to crater. Okay. I think the way to think about it is that, China is a giant, right? It is an economic giant. Its manufacturing sector is bigger than the United States and Europe combined, okay? And this year it's going to leap ahead of Japan to become the world's largest auto export. It's gobbling up the world's EV markets. It's a giant, but it's a giant with a weak heart, okay? And that's going to make it less mobile. It's going to make it more prone to crisis, but it's still a giant.
Andy, this is Secretary Raimondo's trip is coming at a time when we learned also that Vladimir Putin has agreed to visit China in his first trip since the ICC war crimes warrant was issued back in March. How should we look at China's embrace of Vladimir Putin and how that affects relations between the U.S. and China?
Yeah, this is an interesting visit. This will be his first truly international. He's been to a couple of neighboring countries in Central Asia. He went to Iran, but this is the first major international trip that he's taken since the International Criminal Court in Hague indicted him on war crime charges earlier this year. And what this is telling us is the Chinese are not giving up on Vladimir Putin. He was and remains what Xi Jinping calls my best friend, regardless of what's happening in Ukraine. And look, I was in Beijing. You mentioned the Winter Olympics at the beginning of last year, and this was where they hatched their No Limits partnership. Right on the opening day of the Beijing Winter Olympics on February 4th. Games finish on February 20th. 4 days later, February 24th, the tanks and armor and troops roll across the border into Ukraine. And ever since then, China's been giving Russia diplomatic cover in the Ukraine. The bottom line is that they can't have Putin failing in China. It would be a severe blow personally to Xi Jinping. But also the way they look at it in China is, look, if U.S.-led NATO win here, we're next, all right? And so, bottom line, they cannot allow him to fail.
It's complicated, right, Andy, though?
It's super complicated because they're paying a pretty heavy price for this. We talk about business investment. European businesses looking at China now. They're reading right over from Ukraine to Taiwan and saying, we made this big bet on Russia, and look where it got us. And we making an even bigger bet on China. Governments are looking. European governments are looking at China in a very different way. This is Putin is Europe's public enemy number one, and this is Xi Jinping's best friend. Having said that, there's quite a bit that they can salvage out of this. Number one, they're going to have a role. They'll have a role in any peace agreement, and they'll certainly have a big role, one would think, in the reconstruction of Ukraine, if and when we finally get a peace in that country.
Yeah. All right. Listen, thank you so much. So appreciate it. We know it's all been busy for everybody, but do appreciate whenever we get time with you. Andy, be well. Andy Brown, as we said before, leads the China Hub as a partner at Brunswick Group and former Bloomberg colleague, former editorial director at Bloomberg New Economy. But as we said, 3 decades in Asia, China editor, columnist for the Wall Street Journal. So his experience is on-the-ground experience and really understanding it all.
We have the data. We like to get the anecdotes from Andy, too, from his trips there.
Totally. Hey, I just want to mention Costco reported total comp sales for August of 3.4%. So keeping an eye on that in the aftermarket.
In the meantime, let's get a check on latest world and national news. Denise Pellegrini is in the Bloomberg 11:30 newsroom in New York. Hey, Denise.
Thank you, Tim. Well, Senate GOP leader Mitch McConnell appeared to freeze with reporters earlier today. Here's how it sounded if you were in the room.
I'm sorry, I had a hard time hearing you.
That's okay. What are your thoughts on running for re-election in 2026?
What are my thoughts about what?
Running for re-election in 2026.
That's
Yeah, here's the uncomfortable pause here.
Did you hear the question, Senator? Running for re-election in 2026? All right, I'm sorry, you all. We're going to need a minute. Senator.
Meantime, President Biden reaching out to McConnell. Here's what Biden says.
Mitch is a friend, as you know, not a joke. We always, people don't believe that the case, but we have disagreements politically, but he's a good friend, and so I'm going to try to get in touch with him later this afternoon.
And McConnell's spokesperson, meantime, says the senator felt momentarily lightheaded. The Pentagon plans to release information on its controversial policy giving leave and travel allowances for service members to obtain abortions and other reproductive health care. Bloomberg's Amy Morris has details.
The first report on the policy will be submitted in January and will include data through the end of this year. After that, the report will be updated quarterly and will include the number of days service members use and the total dollar amount used by service members and their dependents. The Pentagon will not collect data on the specific uses of the travel and leave policies. Alabama Republican Senator Tommy Tuberville has placed a hold on more than 300 military nominations in protest of the policy. Amy Morris, Bloomberg Radio.
All right, thank you, Amy. And Hurricane Idalia giving a tough time to Georgia right now, and the Carolinas are next, where low-lying areas are on high alert. That storm does continue to weaken damage in its wake in Florida. Global News 24 hours a day, powered by more than 2,700 journalists. I'm Denise Pellegrini.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Developing story and a headline from the Bloomberg Professional Service. Boeing has suspended work at the South Carolina 787 plant because of Idalia. Salesforce out with a revenue and profit forecast for the current quarter that did top analyst estimates after our shares of Salesforce, based in San Francisco, up 5.7%. CrowdStrike also reporting earnings after the close of trading. The stock now down by 1%. CrowdStrike reported revenue for the second quarter that met the average analyst estimate. Turned out to be an up day on Wall Street. In fact, stocks rose for a fourth straight day as another batch of economic reports pointed to moderation, cementing bets that the Fed is approaching the end of its interest rate hikes. Today, the S&P was up 17, a gain of 0.4%. The Dow up 37, up 0.1%. NASDAQ up 75, a gain of 0.5%. 10-year yield 4.10% with a 2-year that's yielding 4.87%. Spot gold up $5.50 the ounce, up 0.3%. 19.43 the ounce. Now on the precious metal, we've got West Texas Intermediate crude up 0.7%, 81.71 a barrel. So an up day for the Dow, the S&P, and NASDAQ. Where do we go for the rest of the year? That question for Hank Smith, Chief Investment Officer at Haverford Trust, who is a guest today right here on Bloomberg Business Week.
We continue to remain pretty optimistic, but recognizing that we could very well have a relatively flat rest of the year, but the broad market do pretty well.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. S&P up 0.4%, making it 4 in a row. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week on this Wednesday. Thank you, by the way, for doing so. Carol Masser along with Tim Stenovic. Hey, and look, it's an ugly truth. Flying is pretty dirty business.
Yeah, carbon emissions, Carol, from aviation make up more than 2% of the global total.
Mm-hmm.
So you think about all the emissions.
Okay.
2% are just from aviation. That's just carbon. And because passengers, flights, and distances are all increasing, it's one of the fastest growing sources of greenhouse gases. So this has put a lot of pressure on airlines and airports to decarbonize. And also there's the question of how consumers could start thinking differently about air travel in a world that's growing hotter.
All right, that's where Kennedy Rickey comes in. He's the founder and president of 4Air. It's a company working to bring sustainability to aviation. He's also a pilot, so he understands this world. 4Air, by the way, has worked with private aviation companies such as FlexJet, as well as commercial airlines, including Southwest. And Kennedy's with us on Zoom from New York City. Kennedy, welcome, welcome. Tell us a little bit more about your company and what exactly you guys are doing.
Yeah, thank you so much, Carol and Tim, for having me. So our goal with 4Air was, really what you mentioned, that we see aviation as such an integral part towards leisure travel, towards business travel, and we wanted to make sustainability more accessible for people who wanted to take action when it comes to saving the environment. So we looked at the different pillars of sustainability out there for aviation, things like carbon offsets, sustainable aviation fuels, and new technology, and how that would fit in for a commercial airline, a private aircraft operator, consumers, and other flyers, and really built it into turnkey programs. So we can help anybody who's, a participant in the aviation industry participate in some of the leading sustainability initiatives.
Okay, so not all sustainability initiatives, though, are created equal. Planting a tree because you took a private jet flight from New York to California, it's not really going to help much, is it?
So, people usually talk about carbon offsets as planting trees, but it's actually a much broader category when we think about what's out there. So when you buy a carbon offset, you go through these different verification schemes, different verified methodologies. So for projects around like renewable energy, you might support the construction of a solar energy plant in India or Turkey, thereby displacing kind of a coal power plant being needed there. In the U.S., you might repurpose and capture greenhouse gases produced during the production of nylon. So there's actually a lot of renewable energy projects, other industrial, efficiency projects that we see around carbon offsets. And you're even seeing more things around carbon removals, using the ocean or advanced mineralization. So there's a lot, very broad category, but it's really important to do your diligence about what projects you're going to use in a carbon offset scheme, and then also to look at other solutions. So things like sustainable aviation fuel, that's more of an opportunity for a direct reduction inside of aviation and will really be one of the most powerful ways for aviation to decarbonize.
So if I kind of bring it down to its base level, what you guys are doing, it's almost like an accounting firm when it comes to carbon credits, right? And when a company is taking certain initiatives within the airline industry, if you will, or in aviation, you kind of help them really track it, figure out where the payoff is. Is that fair?
That's definitely a part of our business. We're really looking at making sustainability in its totality accessible. So trying to make a comprehensive program that's going to incorporate things like offsets. But for sustainable aviation fuel, we have to trace where that fuel came from. And so we'll provide an airline proof of where that fuel originated, what blend it was used from, what the carbon reduction of that actually was, and then help show kind of that carbon accounting back around the reductions generated from SAF.
What is?
We're also looking at things around.
Yeah, before I just want to hit on sustainable aviation fuel for a minute. What is sustainable aviation fuel? What is it made of? How is it different than unsustainable aviation fuel?
So sustainable aviation fuel is basically more of an environmentally friendly fuel because we repurpose carbon that's already in the atmosphere and create jet fuel from it. So with typical fuel, we're digging carbon up out of the ground and then re-emitting it into the atmosphere when we burn it. Whereas with SAF, or sustainable aviation fuel, we're taking carbon either in the form of plants, direct air capture, or other waste materials, and repurposing it back into jet fuel. So there's a lot of different feedstocks it can come from, but we're looking at the opportunity for carbon reductions of 80% and even sometimes more than 100% when we're using sustainable aviation fuel.
But it's still based on oil, right?
It is. So it's the same fuels. We don't need any changes to the aircraft, any changes to the airport, fueling infrastructure. We can use all of the same. It's the same fuel, same chemistry, but we're able to generate it from recycled carbon sources.
Wouldn't it be better? And we're playing a little hardball because we've had a lot of conversations about this. I personally, and I know I'm a journalist, so I'm personally stepping on my soapbox for a second and saying, wouldn't it be better just not create carbon and rather than having offsets? So how do you think about that in terms of helping the companies that you work with figure out ways where they are not even producing carbon at all or reducing the footprint versus offsetting it?
Yeah. So we've looked at new technologies around hydrogen and electric aircraft. Those are certainly going to be a big component of aviation's future. But the problem is a lot of those
Oh, no, a little frozen there. We're going to come back, hopefully, with Kennedy Rickey, president of 4Air. Technology, it happens. We freeze up. But I think we're talking about something that's very timely, and we have to look at all parts of our economy and world in terms of how we can reduce the carbon footprint.
Yeah, as airports and airlines are looking to decarbonize, especially based on climate goals, the question is if these things cost more money, right? Carbon offsets, sustainable aviation fuel. Who ends up paying the cost for those? Passengers going to pay the cost.
And will passengers pay the cost, right? I was thinking about this when we were, prepping for this, like Uber, Lyft. Like, do you take a green Uber or Lyft?
Yeah, I think if it's the same price, I do.
Right.
That's the thing.
What if it takes a half an hour to get to you versus
I have a question for you.
4 minutes?
Do you ever check the box when you're shipping something via a major carrier that says for an extra $1.50 you will offset this?
That's interesting. I don't know that I've seen it. Where do you see that?
UPS, I've seen it.
Okay.
And I don't click it.
Does Amazon do it, or you don't click it?
I don't click it.
Because you don't want to,
It's like, why is it on me?
Right. Like, this is interesting because companies put out these initiatives. We are back with Kennedy Rickey, and we only have about 40 seconds left here. Give us, your goals of how working with companies you think you can make a difference, especially in a summer where we've had so much impact of climate change.
Yeah, so we're looking at really bringing a comprehensive approach to it. So where do offsets fit in? How can you use sustainable aviation fuel? We're even looking at what the non-carbon impacts are of aviation. What are the other environmental impacts and how can we address that? Where is AI going to play a role in that? So really working with an operator, finding every possible way for them to be, to participate in and really build an impactful program for them.
Well, as you work on that, the whole world is still working on Zooms, always keeping up with us, and we appreciate your patience. Kennedy, come back soon because we'd love to talk a little bit more and further this conversation. Kennedy Rickey, founder and president of 4Air, joining us on Zoom from New York City. I think it's interesting, and I think we've got to look at every part of our world to make it better, right? All right, you are listening and watching Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Grayscale CEO Michael Sonnenschein says the U.S. Appeals Court decision to overturn the SEC block of his firm's proposed spot Bitcoin exchange-traded fund is, quote, a huge win. He made the comment this morning on Bloomberg Markets.
Certainly, a lot of investors have been voicing to us increased optimism both around the recent Ripple victory, now obviously the Grayscale victory in court yesterday, as well as what they're seeing taking place in Washington, right? You now have draft legislation that's passing through Congress, and we're really optimistic that there will be greater regulatory clarity for investors through some of these types of actions. And I think if we take an even larger step back and look at the broader landscape, crypto has been one of the best performing assets year to date.
And you can hear more of that conversation on the Bloomberg Markets podcast. You can download it wherever you get your podcasts. Today, shares of Grayscale Bitcoin Trust fell by 4.1%. Visa and MasterCard are planning to boost the fees that many retailers pay when accepting customers' credit and debit cards. According to a document seen by Bloomberg News, the additional Visa charges are scheduled to begin in October for online transactions, followed in April by new fees for commercial credit, debit, and prepaid cards. After earnings today, HP Inc. fell by 6.6%. After earnings, Hewlett-Packard Enterprise up by 3.1%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenivek and Carol Massar live from the Bloomberg Interactive Brokers studio in New York. Let's get a check now on the latest world and national news. Denise Pellegrini's in the Bloomberg 1130 newsroom in New York. Hey, Denise.
Hey there, we're tracking a lot for you, Tim. First up, Senate GOP leader Mitch McConnell appearing to freeze with reporters when he was asked about re-election. That's at a press conference in Kentucky. His office says he felt momentarily lightheaded. Hurricane Idalia ruining vacation for some in the southeast. The storm is moving through Georgia this hour. It could be downgraded soon to a tropical storm. On Tybee Island, Georgia, the waves and oddly warm water tempted some, but now Fire Chief Jeremy Kendrick says it's really dangerous out there.
Don't get on the beach. Go home. Shelter in place. The wind's going to beat you out there. The sand's going to beat you out there. And we've got these bursts of little showers that are coming in, and they hurt.
And meantime, we're tracking that storm for you, of course, closely. Bloomberg meteorologist Rob Carolyn telling us here on Bloomberg Business Week, we're all in hot water over warming ocean temperatures.
The warmer the oceans are, the stronger these systems are going to be. And the other thing I've noticed, I've been doing this for a little over 30 years. In my career, is the fact they are intensifying much more rapidly. From Katrina in 2005 becoming a storm of incredible magnitude in 36 hours, it went from a Cat 1 to a Cat 5. We had the same problem several years ago with Irma and Maria. They became Category 5 hurricanes in just a few days. This storm went over waters that were 90 degrees or warmer over its 72 hours in existence, and that's how you get a storm to go from a Cat 1 to a Cat 4 overnight.
And Bloomberg meteorologist Rob Carolyn with us there. Health officials recommending easing restrictions, meantime, on marijuana. A top official at the Department of Health and Human Services asking the DEA to reclassify marijuana as a Schedule 3 drug. It's currently a Schedule 1. And Blake Masters plans to enter the race for Kyrsten Sinema's Senate seat. Masters lost his Arizona Senate bid last year. He's set to announce he is running again in 2024, according to multiple reports, including one in Politico. Global News 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Denise Pellegrini. This is Bloomberg. Back over to you guys.
All right, so appreciate it. Thank you so much, Denise Pellegrini there. Hey, Carol Massar along with Tim Stenivek, live here on Bloomberg Business Week. You know, we talked about earlier U.S.-China relations and Andy Brown talking about the Apple supply chain and starting to look elsewhere around the world slowly, if you will. There's still incredible exposure in terms of the work that's done in China when it comes to Apple products. India. And you know what? It sounds like they're going to do more when it comes to 3D printers.
This is really interesting. So Apple's actually testing the use of 3D printers to produce the steel chassis that is used by some of its upcoming smartwatches. This according to people with knowledge of the matter, heralding a major change to how the company manufactures products. Oh, I should note, this is a Mark Gurman exclusive for Bloomberg.
Gosh, yeah, man.
That Mark Gurman.
He's pretty incredible.
Knows a thing or two about Apple.
He knows a few. The new approach has the potential to streamline Apple's supply chain and kick off a broader shift if